I got into uranium where it was sort of $20 to $30 a pound. I kind of saw that as the asymmetric setup, the energy policy in warships, because if any country was at the moment saying, no, we're going to go away from nuclear ships, we'll go back to sails for our warships, it would just, it would be hilarious. I've always kind of been bearish EVs. I just didn't see it working. I've always liked tin. Some of the tin stocks are trading at 2-3 times EV to EBITDA. And so it's just valuation matters again. And then when you see people argue that cyclicality is over, usually you're about to get punched in the face. My only metal that I own is tin.
All right, Ferg, first of all, thank you for being here. But I know you just had a kid not too long ago, and it's almost evening in Bali, so you probably just want to go to sleep instead of chatting with me. So instead, I'll just I'll get into the thick of it with it being one of your older tweets from this is I believe from January of 2022, something along those lines. But you've recently retweeted it, and so I saw that, and that tweet quotes, I'm going to read it here: "A whole generation is about to get educated on the concept of intrinsic value." And end quote. And so me, unfortunately, being part of that generation in question here, I was hoping I would get educated on that concept here by you. So yeah, talk to me. Where do you find intrinsic value in a market that's looked at everywhere?
Yeah, well, thanks for having me back on. I always enjoy chatting. And yeah, just want to say congratulations with the show as well. Some of your recent interviews have been some of my favorite this year. The one with Ian Castle.
Castle, yeah.
Yeah, and also the one with Adam Rosenswag, which is brilliant. Yeah, I really enjoyed those. And yeah, just wanted to say congratulations on that. But
Thanks, man. Thanks for saying that. Really
yeah,
appreciate it.
no, well deserved. Yeah, but regarding your question, that was just it's crazy that that tweet was a while ago, and things just seem to keep getting crazy. I think I put that tweet out in the middle of like at the time I was just getting frustrated because I was just seeing stuff like Dogecoin go to 80 billion market cap. I've seen like people launch something called Ponzi coin and that reached like a million market cap. And I was just like, at the time I was waiting for like bankrupt drill rig operators to relist and like buying assets for like 10 cents on the dollar. And people were like, why should I listen to you when I could have made 10x on Dogcoin or Ponzi coin or like, and I was just like, oh, this this is this won't last. This intrinsic value always have to come out shining on a long enough time frame, especially when you consider like there's kind of a historic precedent for this as well. When money starts getting thrown around, like you can go back to all the big sort of inflationary cycles, and people kick off speculation, and there's a time before inflation really gets running that the speculation takes off. People just do crazy stuff, and then invariably, once people realize it's here to stay, then it goes from sort of forecasting future growth to actually like how do I produce real returns and protect what I have. And I feel like we're starting to move back towards that now, and that's really always been my kind of what I've always been positioning for. How can I like search the world and find stuff that will provide real cash flows, will be hard to replace. I want to like buy it for cents on the dollar replacement, and that largely is cheap. So it means probably the world thinks we don't need it. And that's what I've been hunting for, while everyone else is like jumping on narratives, be it crypto, be it even AI now. The just name any of the sort of narratives that have really gone crazy. And it's always this it's fairly simple when you think about it. It's like kind of just like a multiple game on a lot of these stocks, that they enthusiasm keeps ramping up, the multiples keep getting higher until there's a point at which they just can't live up to the future expectations of the valuation, and then it collapses. It doesn't actually matter about like how good the underlying business is. It's just expectations have been put on it that can't live up to it. It's kind of an interesting comparison at the moment now with, so I've been investing in tin, and like I sort of said, like tin is actually a play on like AI, it's a play on electronics. And someone was saying, oh, but you've been talking bearishly about like the AI sort of narrative as a whole, like all, not really. I'm just saying that the valuations given to them are excessive, and the fact is you can be right on like an adoption or a trend. Like take it back to the dot-com boom when you might have talked. I know Cisco at the time saying we'll grow revenue double digits for the next decade. We'll be the backbone of the internet. They did all of that, and from 2000 the stock was like down 90%. And so valuation really matters. And so where I was going at with AI and tin is just the expectations are so low with tin demand and the supply situation so bad that you just keep experiencing great performance going forward, because some of the tin stocks are trading at 2-3 times EV to EBITDA. And so it's just valuation matters again, which is kind of tying it back to that whole idea of intrinsic value, like buy stuff cheaply that can produce cash flow.
Yeah. It's funny you should mention that part, and I read that tweet because typically on a Sunday, wife and I would go for a walk, and so she gets flowers from me only on the Sunday. And this Sunday it was tulips, and it was a price sort of saying it was 10 euros for 3 packs of tulips. Was it? Yeah, it was 3 packs of tulips, like 7 or 9 tulips or whatever in there. And so I started taking them, and the guy said, "Oh, they're a little open already. Like they're not gonna go you for 3 or 4 weeks or whatever anymore. So just take an extra pack." And I was like, "Oh, this is 7 free tulips basically." And I was like, "Imagine this being, a while back. We're in Belgium, right? So we're close to the Netherlands where the tulip mania happened.
Yeah,
Like
right.
imagine this being a while back." And I was like, "Yeah, it would not have physically wouldn't have been different, but only the price of this whole pack would have been like worth a house, if not even more." And that kind of it burned a hole in my wife's ear for like a half an hour, me talking about intrinsic value and stuff that I don't quite understand. But it was fun to think about these things and the times of the mania, which is exactly what you're talking about here with these coins, right?
Yeah, well, it's just fascinating. Like even the most solid like trend, humans will always screw it up by our like fear, greed, behavior. Like take something like I'm trying to think of what might be the steadiest trend, like probably like Moore's law. Like if you just take that the steady progression of Moore's law, a lot of people at the start, if they spotted that, would have sold you on um, sort of capturing that. And yet there's very few things that you can ever capture in that way, because invariably it would be like a cycle over the top of it, because you have like a hype cycle, kind of like semiconductors is highly cyclical. Everyone always forgets that. Like even type, this is an interesting little like side note I had the other day. Type like are semiconductors cyclical? And they're notoriously cyclical. You can go back and check it, and yet the first 2 or 3 articles that pop up on Google were why they're not that cyclical anymore. Like that's arguing that the cyclicality of it's over. And then when you see people argue that cyclicality is over, usually you're about to get punched in the face. And so I it's just there's one place you'll always have an edge, and that's like taking the other side of human behavior. It's like we're never gonna learn. We're always going to be emotional basket cases at the highs, and always just freak out at the lows and sell. It's like probably the best way to look at markets is kind of mass human behavior.
Hmm.
Uh, yeah.
It well, it's interesting. I hope we're going to be touching upon all these things. So 10, and also something else that I'm starting to see an argument for maybe no longer being cyclical is uranium. And so I hope we will touch upon that. Well, let's maybe take it all the way from the top, and actually initially what I think you and I first started talking about a couple of years ago, which was oil. Um, and specifically why I want to bring it up is because I'm kind of well, I'm completely out of the loop on oil by choice mostly because everything is kind of happening all at once. Interest rates, wars, transportation issues, electric vehicle demand fading versus oil, et cetera, et cetera. And so um, maybe give me sort of a high level but real life overview because I know you're going to do that without hype. But yeah, what are you seeing in oil?
I'll just say it's been a frustrating trade, certainly, and been wrong on like shale rolling over. I still think it does roll over. I think we've seen the early signs of it really starting to stall out. But yeah, to openly admit, thought it would have kind of lost steam earlier, and been surprised how strong it's been. And so that's shale. If you focus on nothing else really with oil, it's the whole story shale. It's where all the additional capacity has been brought on over the last decade, and it's just that high decline. And so if you view that's unsustainable and not going to provide the growth we need, and then you go across the demand side, demand for oil is just steadily growing. Every time anyone tries to estimate, it'll roll over. They just get run over. Like there's this fantastic chart from the IEA that's just them getting it wrong for like a decade by 1 million barrel a day just every year, and every year they have to revise it. They just can't seem to wrap their head around the developing markets just growing at a steady clip and increasing their living standards. And I've had some, yeah, it's probably the thing I've like debated the most people on, because there's some pretty like Malthusian views out there that we're not going to get the population growth that we think we will in developing worlds, or that it's possible to kind of pause like I guess the increase in living standards. And I'll always take the other side of that. I think I obviously live in Indonesia, and I see that all people want here is to first get an iPhone and get their kind of that gives them access to the web, gives them access to jobs, and then they need their transportation, and so they get a scooter. So that's just petrol demand, and then lastly, to join what they view as kind of like sort of middle classes, they want aircon at night. Like it's in the tropics, it's kind of hard to sleep if it's like low 30s and high humidity. And so when you consider those kind of things, one's like obviously phones, see a whole lot of commodities. Then yeah, the scooters see a whole lot of oil, and then the aircons just base load. Yeah, sorry, I'm a dog. He's been cruising around. And then the aircon's just base load at night, which is completely incompatible with solar and without storage, and pretty incompatible with wind. And so that's just back to coal unless you've got access to gas or nuclear. And there's a lot of places that don't. And yeah, so tying that all back to kind of oil demand, I just see it just continuing to grind higher as it has on its previous trajectory, like sort of 1.5% per year, just cruising higher. The kind of the narrative that EVs will cut into oil demand, that's not going to happen. People forget, like, of oil demand, passenger vehicles are only less than a quarter, and like half of it's just chemicals, and also the distribution of passenger vehicles in different countries is also quite different. Like kind of a lot of people compare America, whereas China, which has had the biggest adoption of EVs, has also got quite a small passenger vehicle market and got a very large like logistics, like small trucks. And yeah, EVs haven't really impacted that market at all. And so I just see it being next to enough, very, very small impact on oil demand, which is massively overwhelmed by just the sheer amount of people being added. Like I always love to kind of frame it in the fact that we in the developed world consume about 13 barrels per person per year. And there's about 1.6 billion of us, whereas in the developing world, call it 6.4 billion, and they're consuming about 3 barrels per person per year. And we're going to add about 2 billion more to the developing world by 2050. So there's a whole lot more 3 barrels per person. And then you take the likes of India and China, and they're trying to get from that 3 barrels to the 4 barrels or even the 5 barrels, let alone if they actually match our standard of living at 13. And we're like lecturing them, like, stay there, don't you consume more because of the emissions. Yeah, it's not going to happen. They want to increase their standard of living.
But Ferg, global warming.
Yes. So I've heard. Yeah.
No, I'm just kidding, of course. But it's It's also maybe hard to like not pay attention to these things because, for example, I open up trading economics and the first thing I see is US GDP numbers for the first quarter of the year. You know, they're showing well, they call it a slowdown, but it's really a slowdown in the growth rate. So no slowdown in GDP itself, but it's down. The growth rate is down from 3.4% to 2.5%. And so you start thinking like, oh, is that going to impact the thesis? It's really hard to sort of get out of this short-term mentality, if you will. Where like it
Mm.
seems to me like you really don't care about this because I just ask you for an overview and you're like, okay, well, in 20 years, developing world is going to be using more oil. That's one universal truth, and in the meantime, it doesn't really matter what happens. And that's kind of how you look at it, right?
Yeah. So my mentor, he like beats me over the head with it every time I bring anything short term. He's like, "Tell me where it'll be in 5 years," and I'm like, yeah, okay."
Hmm.
So just drag out the time frame and make sure you're at the table. All my mistakes have been limiting my ability to stay at the table, like having, say, short-term options that don't allow me to see the trade through. And there's honestly nothing more painful than being right on something and running out of time on a trade and then seeing it do exactly what you thought it would do. So that's been my most painful lessons and probably why, yeah, in the future, I'll probably use less and less options to express my view and try and stick with probably smaller and smaller companies that as a way to play it and not deal with the time decay.
That's an interesting point. That maybe we can touch upon that as well.
Yeah.
And there's just not much. There's not much long-term pushback that I could offer here for an intelligent conversation. But I was thinking maybe I could offer a little bit of pushback on coal and not the
Mm-hmm.
fundamental thesis per se, because I don't follow that market too closely, and I understand the long term is close to what you just told me about oil, but just following the price and it because you've been bullish on coal for a while now, but it's one of the worst performing energy commodities on a year-on-year basis. Which now that I'm saying it, I'm realizing that's probably making you more bullish on it. But yeah, talk to me about coil. Is this still a big part of the portfolio?
Yeah, no, it is. It's definitely a rough year, and thermal definitely took more of a beating than I like going back and watching some of my videos a year ago, 2 years ago. I didn't think we would have seen these lows, but also haven't like you can never point at luck, but it was unlucky that we had two sort of record warm winters, unless we're going to go down the climate change debate. But to have two and to also have not only were they warm, but they were also windy, which boosted sort of wind power. And off the back of kind of highs with the Russian invasion, kind of really pumping prices. And a lot of people got into coal with too higher expectations. Like right from the start, coal was always supposed to be like a slow grind higher. You buy these things at like 2-3 times cash flow, get fat dividends. No one loves them. No one ever gives them a higher multiple. And is on the back of the Russian invasion. And so that kind of changed the narrative. And people got pretty angry on the back of obviously the underperformance on the back of that with the warm winter. And we're still kind of being punished by that with obviously a warm winter really impacts heating. Heating's the main variable throughout the winter. And so coming out of, take Europe, coming out of the winter, like storage, gas storage was still 60% full. And so there's been a lot of sort of dumping of coal inventories is somewhat of a glut in China, glut in US and domestically. And so, yeah, the price is taking it on the chin. But again, this is a story of just of zooming out and saying China and India are growing at a rapid rate, and they themselves say like we need to keep up with this demand. And unlike what everyone would like us to believe that it'll be wind and solar, the vast majority of it's going to be coal. You already see India's announced that they will be adding nearly a quarter to their entire coal fleet by 2030, which is just absurd how much that build out. And China is already permitted and or under construction a quarter, and with plans being up to a third, and China's by far the biggest coal fleet in the world. So this completely overshadows any reduction in the West. Like this is, I think China adding a third alone is equivalent of the next 5 largest coal consumers, excluding India, in the world. And so it's a big growth market that no one wants to talk about. Everyone just pretends it's not happening, and I just see it being a beautiful long trend. As I often refer to it as where I'll park my money for the next decade until we kind of see some resemblance of smart energy policy, which we might be seeing the green shoots of it now with nuclear. Like if there is a large nuclear build out, then I would start to question my coal thesis, especially if it was like mass manufacturing of like SMRs to take to the developing world, and that would really make me start to reconsider my long-term view. But for now, anytime you see a chart that's just predicting there's going to be a massive hockey stick of solar and wind, I just kind of paint over that with coal. It's the way it'll play out in my view.
But I assume coal power plants are quicker to be built than nuclear power plants, right?
Yeah, definitely.
Yeah.
Fraction of the time.
That might be well, not might be, that's actually a big part of it, right? Of why the developing world is going to go with coal first and climb that energy ladder. Which you had a good tweet about that as well, saying something along the lines of, the West lecturing the East, if you want to put it that way, on energy is like pulling away the ladder after you'd already climbed it.
Yeah.
So it's a good point to make there.
Yeah, it's kind of common sense when you think about it. Like if you work back down the way to always think about energy is like energy density, and it's just how we need a certain amount of energy density to sustain our standard of living, and every level you go up is more costly and more sort of infrastructure intensive. So coal you can pilot in its physical form out in front of a power plant, you burn it, you put it on a ship. LNG, you've got to have the liquefaction, you've got to have these very specialized LNG ships, you've got to have all the pipelines just in time to get everywhere. It's massively costly. So unless you're lucky enough to have large natural gas reserves that you can just pipe, LNG's like a whole nother cost level higher. And then nuclear's obviously that again with an even more sort of difficult, you'd say the Chinese are knocking reactors out on a 6-year time frame pretty repeatedly, but people always love to point at Vogel was nearly 30 years, I believe, and like 18 billion over, or so all the crazy figures to argue against nuclear. But the way I always like to kind of frame it is kind of like warships. It's so simple when you explain the energy policy of warships, because if any country was at the moment saying, no, we're going to go away from nuclear ships, we'll go back to sails for our warships, it would just it would be hilarious. And you can see that throughout history. It was like obviously oars, sails. As soon as you got to steam, they had a massive advantage. Oil, diesel, and now nuclear, and you don't see any sign of them going away from nuclear with all the advantages, and yet we kind of somehow pretend in other areas that we'll get the efficiency from lower energy density sources.
What exchange do you go to though? He wants to be interviewed as well, but also then he doesn't. Is he asleep? He looks dead, actually.
Yeah, he looks like a rug. No, he had a big day on the beach. Yeah, so
I wish I could say the same thing. What exchange do you go to seek value though with coal stocks? Is it the Aussie market? Is it the US? Where do you see more value right now?
but everywhere really. It's there's a lot of value in both the Aussie and the US market, I'd say would be the main two. Been looking at Indonesia as well. Some of them are just dirt cheap there. It's just got to be careful there because some of them are not not the not the cleanest management, but there is a handful that are have proven to be shareholder friendly. But yeah, the majority of my holdings now would probably be probably 50-50 split almost between or not 50-50, still weighted towards Australia a bit, but yeah, between US and Australia. US has got some fantastic met coal, whereas Australia's got good met and also great thermal, like Newcastle, high calorie.
When I interviewed Adam Rosenzweig, the interview that you referred to at the beginning, I also asked him about the difference between the two types of coal, basically the two main types of coal, and whether he makes a difference in his portfolio. But do you make a difference in your portfolio?
Oh yeah, certainly. Yeah, that's been one of my mistakes probably um, going back 3 years was being just fully bullish on thermal and being concerned with the outlook for met coal, as I wasn't sure. I was kind of fell for the whole bearish China narrative and thought China was about to implode, and it would take with the property market imploding, it would take steel demand with it. And I've kind of come around to the fact that I was quite wrong on that, and I think there is actually quite a sort of a infrastructure boom underway. Um, like one of the more interesting stats is that like 20% of oil trade last year was all done in non-USDs. And so when you consider there's a whole lot of countries that are now getting the commodities they need and paying for them in their own currencies, they can really ramp up a lot of their sort of infrastructure spending. And so I think that'll be really pro growth and pro steel demand. You've only got to look at Indian steel demand. It's been really ramping. And so, yeah, I'm on the met coal and I'm more bullish for that than thermal in the immediate term. Yeah, I made some shifts in my portfolio to kind of overweight met more than thermal. And I intend to overweight, kind of, not overweight, but add to thermal quite a lot in the future with once I sort of getting out of other positions that I see kind of starting to get more overvalued.
Correct me if I'm wrong, but as far as I understand it, the coal market is kind of a localized market. Like when India is trying to source coal, they're gonna source it from somewhere close to them, basically. Do you take that in your portfolio analysis as well? Like when you look at jurisdictions, like where is this coal produced? I mean, do you bring that into your stock picking strategies?
Yeah, to an extent. I'm not that smart to the extent like I lean on people like Coal Trader and Matt Water. Like they're far smarter. Like Matt Water, everyone should go and watch all his interviews with he's got a few on YouTube. He's just brilliant. He does it full time. He can like brings up all his spreadsheets and can go through it. Like there's so many different coal grades and um so many like within each the way to think about it, like even coal power stations are often designed for a certain grade, so there's a bit of a fight going on in India at the moment about what size boiler you have, because if you have like a lower grade and you have a larger boiler, you need to be able to fit more coal to heat it, and then if you have a higher grade you obviously have a smaller boiler because you don't need as much, but you can't switch back and forth. So the initial plan when you build a power plant is kind of deciding what coal you're going to run on. And there's like, yeah, obviously they want to run it more on domestic coal. And there's like questions, can they keep up with, can supply keep up with demand if they're going to add this quarter? And so you get into all those debates. I've always just, my kind of view has been stay with the high quality, go with the highest calorie coal, unless like do get tempted by just crazy valuations like some of the Indonesian companies where they're holding a lot of cash, they're paying like 20-30% dividends, and they're just just chugging it out. So
Hmm.
yeah, no, generally stay with the high quality. Yeah.
Okay. So not necessarily jurisdiction agnostic, but also it's not the main thing that you look at.
No,
Okay.
jurisdiction is a big thing as well because we've seen it with Queensland and Australia where when these things make a lot of money and the country itself or the state itself is undertaking pretty silly energy policy, they'll go in with sort of profit or raise royalties and kind of pinch the profits. And so that's a really big concern with some of these. Like you could pick a really attractive asset that does super well, and then it just gets absolutely slammed, and you end up giving a whole lot of the company's profits over to. I think in Queensland they from the windfall they just handed out $500 to all the citizens. Yeah, just to say this will help with your energy bill. It's just stupidity. Yeah, it doesn't. But yeah, that's certainly a concern, and also why I like being in the US. I think US is that's unlikely because the coal industry is that much smaller, and it wouldn't really be worthwhile them going after it to that extent. And yeah, so that's definitely a concern, and that's one of the main kind of like bearish cases with some of these assets in Australia is that if their energy situation gets bad enough that you get like almost like what the UK did with oil and gas, like 85% profit tax, that would just that would kind of kill the thesis there a bit. You'd have to start looking elsewhere.
Yeah, well, you got to keep pleasing Chris Bowen or whatever his name is. I suppose as long as you don't build nuclear power plants there, he's happy.
Yeah.
He never fails to amaze me, really. These clips that I see from his videos, and I don't follow it that closely, but anyways. But you talk about killing the thesis eventually, and that's also a good point, maybe to talk about it. Sort of at what point do you sell some of these hated equities, that being oil or coal? Like, what are you looking for? Is it company specific or cyclicality?
Yeah, well, it's just going into them, you inherently know they're highly cyclical, shitty businesses. And so I'm just looking to own them for a window of profitability before they inherently go back to being shitty businesses. And some of them are easy, like some of them take like drill ships. That's you have a window to own them when you can buy them for a fraction of replacement cost. You can understand what that replacement cost is. You can see when new builds get put into the market, you can understand how long it'll take for them to come on. You're going to have a period there where it's difficult to bring anything to market. So you'll have elevated rates, make out like a bandit on cash flow, and hopefully price performance. And then they'll do what they always do, over order and screw it up. And you've got to have known to get out prior to that. And so a lot of like the hard assets, it's kind of easy to see that. You've just got to be quite disciplined with watching like new builds, kind of like whatever you call it, like the food going through the python. As soon as those new builds start going in, you know your time's limited. So those ones are quite easy to kind of work out how to time an exit. You can kind of put that exit plan down quite easy. Coal's more difficult, as I touched on before. It would really be have to see more rational energy policy displacing coal demand. Like I've got a certain amount of like energy demand. I just see there's a great chart from our world in data that's like total like energy demand across the world, and everything keeps rising with the rising population. Like we just consume more energy, and so unless something higher energy of a higher energy density than coal, which would definitely be nuclear at this stage, really starts to displace that demand and the need for coal, then that would be when I'd start heading for the exit there. Or alternatively, if they just get pulled into a bull market and they start getting higher multiples, and I think the forecasts start to sort of get ahead of themselves. But I struggle to see that happening with coal. I'd be so surprised if everyone just kind of dumps the whole ESG and plows back into coal in the coming 5 years. I'd be surprised. I see that more coming with uranium. I think everyone's, now that all the alternative or green energy has been sort of a dumpster fire, I think there's going to be sort of if there isn't already starting, a massive sort of performance chase with uranium, because a lot of those sort of green energy ETFs are in deep shit otherwise.
Well, it's also kind of a popularity contest, right? Because nuclear is getting very popular with young people. Rarely am I gonna, talk to someone who's in their 40s, 30s, and not be bullish on nuclear over the long run, basically. And it being a popularity contest, what I mean by that is that politicians are just going to start supporting it, not because they believe in it. They don't have souls, as we all know, but they just want the votes, right? They want
Mm,
those young voters. And so that's actually maybe something we can talk about as well, because it's not uranium is, again, not as hated as much, or not at all, really. Again, pretty much everyone from David Hunter to Uranium Insider, my mom and dad are bullish on the uranium, besides my wife, understandably so. But the price still keeps going up, right? With no no supply response in sight over the short run, at least. So I know you were bullish on uranium last time we spoke, but I'm not sure
mm.
you're as bullish on it now. So how do you generally reconcile being bullish on uranium as a contrarian here, where it's no longer the contrarian play?
Yeah, I'm still bullish on it. I always get misquoted as by saying I would no longer buy it. That gets put in the same basket as bearish. I think the thesis has got legs. I just see better value now in buying other stuff, and be it coal, be it sort of offshore oil, be it tin. I see more value there because I got into uranium where it was sort of $20 to $30 a pound. I kind of saw that as the asymmetric setup. I'm just seeing it through to my exit plan. And so, yeah, I always get kind of misquoted on that, being like, oh, if you're not buying, you're obviously bearish. But no, that's by far my biggest position. And I uranium's really interesting because I've gone back to I really like look at sort of models, but I was kind of got really interested with some of the announcements. I was like, can this actually like balance the market, even like going through all the projects? And so I sort of went through it a few times, especially after Kazatomprom sort of lowered their guidance, and pretty sure they're definitely not making 2025. So take like this year, if you take the 10 million pounds out, that's pretty much every developer what they could add and more that Kazatomprom is just like removed from them. Not and most of those are missing anyway. Like I don't know, like the first one that comes to mind is like Global Atomic, like just running into like issue after issue. So if that comes on, that's going to be like, yeah, take a guess. That'll be delayed by years, probably with all the issues with financing. And yeah, even if you just assume everyone nails their guidance, you still don't you don't make close that supply demand gap, which I find kind of crazy. And you just do that every year going out. You even start making silly assumptions like pull next gen forward, pull like stuff that just won't happen. And I can't close the supply demand gap. And so it's like joking to a friend the other day, is this a functionally like a a fundamental argument for shitcodes? Like they have to close the supply demand gap. Like there has to actually be pounds found and brought in. Like there's plenty of uranium out there, but like they actually have to bring it through to production. And last time round, there was a very poor track record of any of them. Pretty much none of them did without a JV, a help from a major, or Paladin was the sole one that brought it from like early stage right through to production. And now we're just expecting all these guys to do it when there's been like a hell of a bear market in capital. There's been a hell of a bear market in stuff. Like these professionals just gonna appear that know how to ramp a uranium mine. The more I look at it, the more I'm like, not I'm not going to start trimming as soon as I might afford. Now that I've kind of run through the numbers a few more times, I'm like, I'm not going to be raising, like I see the charts with the different demand. There's like upper bound, lower bound. I'm staying really conservative on that. Just work out current operating reactors like 440 and add like the 60 under construction. Just run with that. Kind of try and don't ignore all the promises of additional builds and all the planned reactors. Just stick with that and say like, how do we get there? Because there's enough. Like, yeah, I can't make it work. And there's also you've also got the fact that they will overstock, as they always do. You've got the fact there's all these financial players in the wings that have got to deploy capital buying it. I think it ends, yeah, it invariably has to get crazy because of incentives. Money has to flow into the sector to incentivize people to fix that gap. And so I'll hold out for that and then trim heavily into that.
I can see the title for millionaire Bali trader says he's bearish on uranium. 50,000 views and 200 angry comments at you. But same question then as with coal though. Where do you go for that intrinsic value? Like the uranium equities they're down from their highs, but are they cheap? There's an argument to be made that they're not cheap, right? So where do you go for intrinsic value?
Yeah, that's a tough one. This is what I always get called out on because I'm like focused on super cheap stuff of like coal, and yet I hold stuff that's got very not cheap unless you pump in some when the numbers you have to put in to justify holding it is definitely not cheap. And so that's hard. But with uranium, I always just struggle because there's no alternatives. Like you've also got Xataprom underperforming. Like you can buy Cameco, sure. You could buy just straight out physical, which was probably the smart trade. I like that, but I went for the more gear trade. I was like, I don't back myself really picking developers. So my entire strategy back in 2020 was just I'm gonna like try and go after the biggest no-brainers, and that was Paladin, which already had a mine and care and maintenance. I was like, it's hard to screw it up when the company's already gone bankrupt, wiped out 300 million. It's got a history of producing. It's in care and maintenance. I see that as like an easy way to really get good leverage, and that worked well. And the second was Boss, and that was like the sort of quality ISR, and so that was where I kind of found myself. I just don't see any. Every time I want to leave the sector, I don't see any kind of. I think I would regret it from having spent so much time understanding the sector and at least wanting to see a chance of the supply-demand balancing before I head for the exits. And so, yeah, I guess it's turned from somewhat of a value trade into a momentum trade based on kind of understanding the thesis, which, yeah, isn't having a good exit plan as well helps, knowing exactly what I need to see to start exiting. So it's not just writing it for the sake of writing it and hoping that it goes to the moon.
Which happens a lot. So it's kind of the right decision, maybe for the wrong reasons. I talked to a guy, no famous name or whatever, but I met a guy at a conference and I spoke to him about uranium, saying more or less the same thing where I said, like, they're not cheap, right? So how do you deal with that? And he said, in my experience, the cycle doesn't end when the stocks stop being cheap. The cycle ends when the stocks get stupid. So there's a difference between fairly valued and stupid, and uranium never is, in his experience, what he said, uranium never stops at fairly valued. It stops way after it becoming stupid. So it can get stupid and then twice as stupid. And then that's when you sell. That was basically the conclusion there. Hard to time, and it might be a short window. But that's basically the main takeaway there, I suppose. Let's
and sorry, I was going to say it's also one of those few things that's kind of I've said this before, but it's one of the few markets that you can actually work out, and the fact that there are price insensitive buyers, that there is no substitute. So it should always be pointed out. Like trying to do this in any other sector, I'd run. Like wouldn't do this in like lithium where they can swap from a lithium-ion battery to sodium. Like that just doesn't. like you've got to be very careful with demand destruction when prices start to run. And I see that mistake made a lot, like kind of taking the uranium thesis over and jumping over to another commodity. I was like, oh no, because I think demand is a lot more sensitive. And I'd say that about the whole kind of battery space. As we found out, like it didn't even need to run that much. And now BYD's got a sodium ion battery factory, and yeah, that's what they're running with. There's no lithium, there's no nickel, there's no cobalt, and their batteries moving forward. And so good luck if you kind of had forecast all EVs to run on a lithium ion battery. That's got to damage that. And so yeah, that was one point of being such a closed, understandable cycle. Like you're not requiring retail demand and enthusiasm to drive the price. You're literally needing like guys running fuel buyers running multi-million-dollar reactors for which uranium's a few percent of their operating budget. Yeah, not as like the analogy of you're not gonna not fuel your Ferrari because the price goes up 5 times on a tank of gas. Yeah, you're worried about you put so much, you sunk so much investment into the Ferrari.
That's true. Despite most of those Ferraris probably being rented by people trying to flex on you on YouTube, maybe they actually do stop fueling it.
Yeah.
Not the case for reactors though. But it's yeah, I mean, I share your opinion on there. Again, nothing really to push back on with uranium. You have mentioned tin a couple of times though, and I did want to talk about that because it's almost too much to follow, or maybe it's too niche, and it's also kind of a mess right now with what's been happening with tin. Like there was one party holding a whole bunch of tin. There's a difference between what's in China, what's on the LME, and so on and so forth. There's like it's kind of a mess right now, as far as I understand it.
Yeah.
And it's you know, it had a very nice spike over the last couple of weeks. It's raised almost all of that now, but although it's still up from about a year ago. So yeah, what's happening there? Do you follow the macro on tin, or do you just again follow on the companies?
No. So I've always liked tin. I've got some put like a long form video up on tin. I think it's on YouTube going back a few years, and kind of got it wrong with I didn't understand how much tin demand was driven by electronics, and everyone obviously stocked up on electronics throughout COVID. So there was the stocks did really well through that, and I didn't understand like the old story. I didn't understand why they were outperforming so much based on that, and rode them up and over the top. And so got out my tail between my legs because everyone like staying at home, you needed the laptop for every kid for homeschooling, and so with the over demand, there was sort of under demand. But the story of tin was always that the supply situation, if you looked out a few years, was really was again kind of like not too dissimilar to uranium. There's big deficits looking out there. A huge supplier for years was Myanmar, and a lot of that was really easy to access, sort of surface level mining of tin, and they've worked through it all. They've like high graded the hell out of it, and now their exports have fallen through the floor. They've even stopped exporting to China more recently. It's pretty much dried up. The current sort of, I'm forgetting what they're called. It's like a military government. They are currently in control, and they're doing sort of an audit. But yeah, it's largely they've run through their reserves, all their easy reserves. Even if you map out all of tin's reserves, it's still only like I think from that's brown numbers, but I think it was only like 10 years of global reserves left across the world for tin, and it was a lot of the countries are already sort of are really dropping off rapidly. Indonesia's also been cracking down on a lot of its sort of smaller tin mines, and it's continually threatening to stop exporting, and it has been recently because it has a new government where they're talking about or that was the past government as well, but talking about sort of keeping more value within the economy, and so they won't export the raw material, and so they don't have the capacity yet, but they're trying to force it by keeping it in the country. They're doing the same with nickel, and kind of saying like you can only export it once you've added value, which is I think it's a smart policy, but it's having the effect of like if the capacity is not there, then it's just locking the tin in, and they've been underperforming their sort of tin production as well, and so those are the two big producers along with China, and all of them are sort of there's no big silver bullet or supply coming through. There's nothing really under development, and meanwhile tin demand is just steadily climbing again. So after that boom in COVID sort of bottomed last year, it's now ramping up again. And for anyone that doesn't know, tin, about half of all the tin's solder, so they call it like metal blue. And in a sort of almost a parallel with uranium, it is really hard to substitute. So like the often used example is like an iPhone has sort of 4 or 5 cents of tin in it, and so it's pretty, you're price insensitive. If tin goes up 10x, like you're not really going to care that it goes from 5 cents to 50 cents a tin in your iPhone. Like it's not going to matter. And it's a lot of the other uses of it are reasonably, they don't pretty price insensitive as well. And so it's super niche. No one talks about it. I like I like how small it is, and I think it'll just continue doing good things and being off the radar for the majority. And I don't know how that supply demand deficit gets fixed without really high prices bringing more attention to it, because it's also such a tiny market. It's not really worth any of the majors' time. Like it's like, I tried to work it out as a percentage of the copper market. It tins 5%, I think. Yeah. So it's small than uranium.
Definitely smaller. Yeah, I like, there's one guy who talks about a tin investor on Twitter. I like his account. It's very funny. He is great. Yeah, he does not miss one thing. Like he gets everything that goes out there. I'm sure he's gonna get this one too, weirdly enough. But so with tin being as volatile as it is, though, how do you even begin analyzing something like Alpha Min Resources, which is as another guy on Twitter, sort of a friend of mine, also Pete, said that it's set to become a tin dividend play again, which it was before, I suppose. But yeah, I mean, attractive yield too. It's not 20%, but it's still attractive. It's 7-8%, something like that. Not too expensive based on the current prices of tin, but you never really know where the prices will be when you wake up tomorrow, I suppose, or over the short run. There's going to be a lot of volatility. So how do you even begin looking at Alpha Min and other companies like that, although there aren't many?
Yeah, well, that's honestly what you finished on there is the main point. There aren't many. There's after going through the whole space, there's really only two. There's really only Alpha Min and Metals X, and I those were the two I owned going back when I first researched the sector, and now I own one of them. And you don't really have to overthink it because they trade so cheap. Like these are trading like coal companies on sort of, they're producing cash flow. They've got great what was I going to say?
Cash flow yields or something?
EV to EBITDA. I think I was trying to say, yeah, they're both just trading so cheap. They've got great production, like especially Alpha Min's got a lot more coming down the pipeline. Metals X has just decided it's too cheap and going to start buying back stock, which is always great. Got a lot of leverage to the upside. And yeah, the only real issue, I guess, is with Alpha Min, it's by far the best resource, but you got to ask yourself how comfortable you are with being in the DRC. So that's my main reservation there is I've had enough sleepless nights being in the likes of Global Atomic and Nigeria, and so I don't know how quickly I want to jump into even more miners and even more and more dodgy places. So yeah, but yeah, those are the two ways to play it, and I think both of those companies do amazing. Granted, you don't get some sort of unfortunate event in the DRC.
But so you basically just don't overthink it. So when I ask you how do you analyze it, the answer is pretty much you don't, because there's not much choice. And I mean, you look at some of the cash flows, and that's enough for you.
Yeah, yeah. Look, cash flows go through the company. Talk to some of the people that know it a bit better than me. Like, yeah, got I'm forgetting his name. He's done some great interviews on it. It comes to me. Anyway, he's been involved in tin for a long time, and he runs through the companies in depth. And yeah, he's like, this is the bull market. These two companies are the only way you play it. As soon as you start looking, like some people always like throw, I think it's like Afritin was named itself now. There's one in London, in England. I'm forgetting what its name, maybe Cornwall Tin or something. But both of those are just absolute specs, and they don't even really move with the tin price. And I just like when you can buy something trading it 2-3 times EBITDA. Like I don't want to, like, I don't need to go to specky stuff. I'll just stick with them. And so yeah, that's it really.
Well, that's also been the right approach for uranium. If you look at it, Cameco's done really well since kind of the beginning of the cycle, and a lot of the smaller companies have gone through volatility, but then eventually done worse over, well, depending on the period that you measure it at. But not overthinking uranium would have made me money, but because I definitely overthought it, bought at the wrong spots and then the wrong companies, it's actually costed me money. So it's a fair point that you make out there. You're also you're very kind of outspoken on electric vehicles, and I share your sentiment after having unfortunately owned one it was just for a week before about a week before I sell it. Luckily for me, cut my losses short. But with China now making EVs more and more affordable, I believe I read an article about BYD's entry level model selling at like $10,000 or something like that in China, and although much more expensive, Tesla's prices have also been falling recently, right? And this goes back to Moore's law that you mentioned earlier, and the prices will eventually be substantially lower, even for the decent cars, than they are right now. And so, with lithium and nickel looking to have found a bottom since late last year, I'm also kind of starting to wonder whether whether these cheap cars will now have an effect on the demand side for battery metals. So this is basically a long-winded way of asking what's up with battery metals, and do you throw them sort of in the same basket as tin and uranium, or is that a completely different thing that you look at?
Yeah, so I like wrote a post on this a while ago called sort of fantasy demand versus real demand, and I'm just always very careful when I get to the fantasy demand was probably what I mean. I should have probably called it inflated demand, but I thought there was so many assumptions going into EVs from the start. There was the assumption that one particular battery technology would win out, and then there was the assumption that EVs were superior to internal combustion hybrid vehicles, and so those adoption curves to me were wrong as well. And so yeah, so I've always kind of been bearish EVs. I just didn't see it working, and I spoke to someone. I got a chance to interview someone I really admire, who's Lewis Vincent Gov, and he shed even more light on it for me in the fact that a lot of what we project off with the China sort of uptake that was mandated by the party, and so a lot of that wasn't actually retail uptake. Retail uptake was actually quite low, and so when you kind of repeat this, you kind of see this across the world. Like it was almost like we're almost projecting off like the initial uptake was almost like people similar to what happened in the US, people buying it as like a luxury, high priced item, and it's not only the price, it's the fact that you needed a car park and you needed the ability to charge it. And so once you work through that segment of the population, it's actually really hard to continue ramping it where people don't have the ability to charge it. Like I know people here that have bought EVs and they've given up on them because the grid here can't handle it. If you've got to charge it with your wall plug, you're going to take sort of over 12 hours, and you can't have that if you're trying to, that's just too inconvenient with life. You have range anxiety. If you go anywhere, you can't, if you kind of run out of battery, then you're going to have to be stuck there to charge it again. And I think that's the case throughout the developing world. I think the initial uptake we saw was almost saturating the demand for it. And you've seen someone to follow that's actually been really interesting is the Toyota CEO. He's been holding his line for years now, saying that EVs will never be more than 30% of passenger vehicles, that hybrids are the future. And they have kind of stayed away. I think 1% of their revenue is from EVs. They've only got a handful of models, and they keep pushing hybrids.
Yep.
And they've announced they increased their profits. Last quarter was up 10%, and every other EV maker is just getting absolutely crushed. And I kind of see just a massive price war, as you say, with BYD just massively undercutting all the Western EV makers. I don't know how they survive, honestly. Like I saw Elon tweeted the other day sort of a Tesla EV starting at 29,000, but then he had like the little disclaimer at the bottom, once you include the 7,500 EV credit and including petrol savings is included in that price. So I'd love to see the working on that. Like he's discounted it off when obviously you have to pay it when you buy the thing.
Yeah.
So, but yeah, I think it's going to really disappoint moving forward. I think it's all these crazy adoption curves are going to massively underperform, and I wouldn't touch any of the battery metals with a barge pole. I think they heavily underperform energy, and yeah, my only metal that I own is tin.
Okay. Yeah. And that's indirectly, but not as much influenced by EVs too, I suppose, because you still have to have it in the chips and whatever. So if you end up being wrong, you're wrong to the upside, basically. So
yeah. Well, tin's massively broad, so it's kind of interesting because it's in everything. I've got this one chart that just shows like kind of exposure to the energy transition, and tin's in everything. It's like so it's almost a little hedge in the portfolio. If all my views of espoused have been wrong, and EVs, renewables, all massively scaled, then at least I'll make out like a bandit in tin.
Yeah, with how the recent YouTube scene has been developing, tin is going to be used in a lot of hats too over the next coming years. So I've we've talked about oil, coal, uranium, tin, battery metals. We haven't talked about all of the things out there, but we've talked many of the commodities that you're bullish on. I think probably all of them. But what else is so something out there, something niche that I haven't heard about, some niobium or something like that you're low key getting fired up on?
I've looked at a few super like niche things, and usually have to get involved in sort of geology, or have to understand like kind of juniors, and I really struggle with that. So um, I have a bad history with it as well. Someone said you should. This is back in early when I got on Twitter. I think it was like 2020. Someone was like, you should look into helium. It's really interesting. And I went through the whole market. I was like, it's tight, makes sense, but the only three ways to play it are these three stocks, and they're so specky. I can't bring myself. Like I think the average one was like a 20 bag, and I passed on all of them. So yeah, it's kind of one of my faults is I struggle to pull the trigger on like juniors. I always like I like kind of like buying stuff that I know what the replacement cost, or is producing cash flow to help me value it. Yeah. And so I, that's sometimes be to my detriment, but usually keeps me out of trouble.
Yeah. Yeah. Well, I wish I was more like you actually, because I do the exact opposite. I get very fired up on these small caps. get sold on stories. I also was not sold on the helium story actually, although a lot of people tried pitching me on it. But yeah. Good. This has been a very good conversation. I don't necessarily have anything else to go through. What am I forgetting though? What else did you want to talk about when you came on here?
Um, I think I've been like, so I recently wrote a post on my Substack. It was called Moats and Cannibals, and I think this is like when I like actually. Sometimes you've got something rattling around in your head, and you kind of understand what you're doing in your portfolio, but you never really put it on paper. And
Hmm.
so that was the first time I kind of understood what I was like, how I was trying to position myself for the longer term. And like the basic idea of like moats and cannibals was I like wanted to find where I see us going is like a more inflationary environment where there's going to be energy is going to be more scarce, commodity is going to be more scarce, and you want stuff that's going to have a high replacement cost in that new environment, and you want things that have a high replacement cost and are hard to replace. And you, when you layer on top of that as well, the willingness to buy back their own stock if the market refuses to give them a good valuation, you can get some pretty extraordinary performance. And the cannibal side of that was I was actually stealing that from a guy called Monish Prabha.
Mhm.
He's a like a Indian value investor, and he like calls them cannibals, and he's got like a whole study on companies that just go after their own float essentially with cash flow. And um, I've kind of like taken that, gone through some of my favorite stocks and found the ones that are actually going after their own float, and kind of taken where like an example might be something like a Seadrill. They've bought back about 15% of their float now, and they've gone. So they went bankrupt, wiped out off the top of my head. They wiped out like 4 billion, so which was all the money used to acquire all their rigs. They then acquired Aquadrill, which had also gone bankrupt and wiped out, I think, a further 2 billion used to acquire its rigs. So you've now got this dirty big moat of this company that owns a whole lot of rigs. Um, the market's turning, they're in demand, day rates are inflecting, and the industry that built all these rigs, the shipping industry, shipyard industry, has also gone bust building these rigs because they overbuilt them to such an extent
Hmm.
that they sent them bankrupt. And got a period where the day rates are starting to inflect. They could earn large returns. They've already demonstrated that they're going to be concentrating on buying back their own shares, because even if they did want to put money into new builds, there's no ability to do it at the moment. Shipyard capacities pretty packed out with uh, container ships. From there was a container ship sort of spike in 2022, and so they used a lot of their money to order container ships. That's packed out a lot of the capacity. There's a lot of LNG carriers, and um, and that's kind of used up a lot of that potential capacity out to late 27, 28. And so even if we get a bull market tomorrow in offshore rigs, they can't even get a new build order in until say 28, and then another few years to build. So you have this period where they just earn extraordinary cash flow, and the markets stay really tight, and they'll use it to buy back their own stock. And so I just went through every sector trying to find the companies that I think have got an ability to do this. So the example also applies to coal. Some of the guys, some of the companies there are expanding production, whether through sort of M&A, like the likes of Whitehaven, or others are doing it more organically. If you work out the sort of cash flows they could have and how much they could buy back their own stock, a lot of them have also been watching what Alpha Met Resources has done, and they've bought back about a third of their stock, and they've been like about 100 bagger off 2020 lows, and so they're well aware of how beneficial that was. And so I think a lot of these coal players could go that way, which would be pretty extraordinary.
Hmm.
Yeah.
That's something that we could probably do a whole podcast on that thing alone.
Yep. Yeah,
I've already
sadly.
taken up I've already taken up a big part of your evening there, though. So I don't want to do that. You're writing a Substack. You want to go ahead and plug that?
Yeah, sure. It's just trade at ferg@substack.com. That's where I do all my writing now. Yeah, I don't hang out on Twitter much anymore. That's just a bot that retweets my most popular tweets of the past few years. It just looks for anything over, I think it was like 100 likes and reposts it. So it's not even me. Yeah. So yeah, all on Substack now.
Yeah, passive engagement. Nice. I love it. Yeah, and people should read that Substack. There's also free stuff on there, by the way. But yeah, Ferg, it's always a pleasure to chat. Thank you very much for doing this. We'll speak again soon. And in the meantime, I'll move over to the CEO barbecue portion of this episode where I'll be talking to a couple of companies. Of course, as always, though, before I do that, for a disclaimer and honest confession, here at Resource Talks, unlike most people out there, we don't actually hate you. So you should know that I have no idea what I'm doing. I've never booked any serious profits in this space, and I should not be considered any type of authority here. I just don't have a track record to tell you what I'm doing with my money. So you shouldn't be asking about that. You shouldn't care about what I'm doing with my own money. In addition, I should also be considered biased here because Baselode Energy is a paying client of Resource Talks, and this video is part of their marketing campaign. So, although at least a couple of seconds of research might have gone into this interview and into all of these interviews, and although I never share the questions up front, nor do I give the company's editing rights, you should still be skeptical of everything you hear and see in here, and you should consider everyone biased. Again, these are, as I always remind you, these are private conversations between two talking heads on the internet, so it only makes sense for you to approach this conversation with caution. And if you don't enjoy losing money, you should also head over to setterplus.ca to look at the company's official filings and read them, bake them, eat them, do whatever you want to do with it. Obviously, there's forward-looking statements, yada, yada, yada. These people like talking about stuff that might or might not happen in the future. There's something on your screen right now that you should read just to be careful. And the first company I'm going to start with while you're doing this is actually me traveling to the warm and cozy Athabasca Basin to talk to a company again and a gentleman who need no introduction, with that being Baselode Energy and James Sykes, respectively. The company is listed as FIND, so that would be FIND on the TSX Ventures Exchange, where an average of about 350,000 shares trade each day, with a 52-week high of 61 cents and a 52-week low of 31 cents. And with 130 million shares outstanding and a $44 million market cap, today this is a 35-cent stock. But that's not why you're here, James, because since last time we spoke, you've doubled your drill program for Catharsis, and you've completed drilling that second part, basically, even though you didn't find meaningful uranium grades in the first time. So what's happening there?
Well, I guess first of all, you've never been to the Athabasca, have you?
No.
Because it's not warm. Not this time of year. It's still pretty cold. There's still snow on the ground.
Well, I'll keep
But
pushing you to take me there one day, so maybe you'll do that.
absolutely, let's hope this is the year. Let's hope this is the year. What's going on in the baseload camp? Yeah, we completed Catharsis drill program. We're very happy with the results that we've seen, at least in the three different target areas, and just waiting on the assays to come back to put all of the pieces in together. Because right now we're just going off visual confirmations, which do look quite encouraging indeed. But we need that extra little oomph from the geochemistry to let us know if we're on the right path or not.
Okay, so you don't know if there's uranium or not in there.
No, not yet. And depends on the degree of uranium. Like sometimes you're looking for, obviously the best thing to do is to hit a whopper of a drill hole. That's number one. That's exploration. That's what everyone wants to hit. Sometimes it's not that easy. You can be right close to something. And I bring up Rough Rider as a great example of that, where SMDC, Cameco's predecessor, used to have the Rough Rider project, and they drilled right over the deposit, and they stopped a few meters beneath the unconformity. If they would have gone at least another 10 more meters, they would have hit high grade mineralization. That's it, 10 meters. But the within the alteration that they saw and within the geochemistry, it was just screaming hot, like for the right signs. And I'm not talking boron or nickel or copper, things like that, but the certain uranium pathfinders, which are uranium and ratios relative to uranium and its isotopes, to its daughter products, which are lead isotopes, those can point you in the right direction. And those were screaming hot at Rough Rider and help lead Hathor focus in on that area and say, this is a perspective. So we're looking for the same type of things on our project as well, because the alteration was there, the structure was there, but now we need to see if mineralization is right there. I've been on a few projects where you've drilled right beside high-grade mineralization within 10 meters and boom, there's nothing there. The only thing you can rely on is pathfinders.
Well, talk to me more about that. You mentioned the structural controls, and also just this structural corridor on Catharsis where you found radioactivity. What are the geological characteristics there?
So the first 3 holes that we drilled, which we did put out a little bit more of a detailed news release on with an accompanying video. The first hole, hole 9, we hit elevated radioactivity at a geological contact, so between your metasediments and your granites, which is typically where you find a lot of basement-hosted and unconformed demineralization within the Athabasca Basin, is along that contact, because it's a buttress point. The granites are really hard, and so they're nice and rigid, and the metasediments are typically softer, if you would, and those are the ones that get mobilized and just move along that buttress point. So that's where you get a lot of your fractures, and that's where you get a lot of your graphite accumulating at that contact. But you don't always need graphite. You can have things like calc-silicates, which are equally as squishy and mobile. And that's the setting that we were seeing at Catharsis. We had our graphitic rocks, we had our peelites that were metamorphosed, or obviously they're metamorphosed, they're basement rocks. They were structurally mobilized, and our calc-silicates right at that contact between the metasediments and the granites were just, they were broken up, they were altered. And so that first hole that we drilled right at that contact within the metasediments and the calc-silicates, we had significant core loss, meters and meters of core loss. And we didn't see radioactivity in the hole because it must have been amongst the core loss. But when we ran the downhole gamma probe, we had a spike right in that structure and alteration envelope. So we looked at it and thought, this is very encouraging right off our first hole. Followed up with the 2 additional holes up dip from that, because I think that intersection was about 250 meters beneath the surface. Okay. So we followed up dip from that, and the structure and alteration just kept getting bigger and better. Very encouraging. So we were excited right off the bat and said, Catharsis has a lot of potential. Catharsis has tons of potential. So we wanted to really hit a home run with Catharsis with this year. And the idea with having a helicopter is just to poke around, try a different number of holes. We could have sat at one area, as we did basically last year in 2023. When we did our first drill program, we targeted 2 areas with 8 drill holes. We could have done that on a lot of different target areas here, but again, with the experience that we have and the ability to, what I feel, we have got a very strong ability to suss out mineralization if we get on the right trend. Then after that, it's just a matter of time. But we need that geochemical portion, that geochemical element of the whole program to help us vector into things. So we drilled. Yeah, sorry.
No, go ahead. I was just going to ask, when do you think you're going to get those assays back?
Probably within 4 to 6 weeks. Hopefully
today.
within 4 weeks. Now that it's been, I think we stopped the program about 2 weeks ago, a week ago. So yeah, it should be about 4 weeks. Fingers are crossed. I know the lab's kind of busy though.
Okay.
The Athabasca's been very busy this year.
Very busy. Yeah, it only makes sense this time of year too. So when you say the rocks there were altered, in what way are we talking about? Hydrothermal fluids that have potentially been coming up, or?
Yeah, we don't talk about alteration as anything other than hydrothermal. Okay. You can get retrograde alteration, which occurs during the whole metamorphic process where you're turning biotite into chloride or things like that. That's not alteration to us. That's just part of the whole mountain building process. When we mention alteration, we're specifically looking for hydrothermal alteration.
And so what that means, to translate it to my 5-year-old brain, hot water came up, hopefully carrying uranium mineralization.
Yeah.
So you have
Exactly.
proof that hot water came up because you're seeing the rocks, and with the assay results, you're going to get an answer to, was this hot water carrying any mineralization with it?
Yeah.
Okay.
Exactly.
Good. How come core loss? Was it due to something in the lithology, weak rocks, something, a drilling mistake? What happened?
No, it sometimes that happens in structures. You get dilation zones where the rocks actually kind of break apart, creating a void in the rocks. So as you drill through those, you're going to hit nothing but void. Sometimes it is due to alteration, as I've seen plenty of times. And so when you're drilling through with the diamond bit, you've always got water pressure, and that water pressure can be enough to basically turn altered rock, which is very soft after a point. Most of the times it's clay. You can really cut that away, and that creates a void. That creates its own void, and the drill cuttings actually come up on the side of the drill rod, and they come up to surface instead of core being intact within the drill rod that you can recover. So the drilling process itself can create core loss. So it's natural and or part of the drilling process. But it's typically a good sign. If you're seeing significant core loss, then you know you've had structure there. You've had probably some alteration occurring as well.
Okay. Oh, that makes sense. So you basically had those highways for the fluids to have come up.
Yeah.
And that's again where does that core go? Like when it's lost, where's the core?
Down at the bottom of a chasm.
Okay.
Yeah, it's if it's a dry structure, again, just breaks open with no fluids coming in after that structure, then you've basically just got a hole in the ground, and all of those fragments just go bloop, fall right down. As you're drilling and creating core loss that way, those cuttings, as they're called, so as the drill bit goes down and it cuts through the rock along the outer annulus of the diamond bit, that's where you get all your cuttings. So your little bits, your little, sub-millimeter fragments of rock, and they just come up as a clay, as a slurry with the water right back up to surface. So that could be the other place where they accumulate.
Okay. So while you're drilling and as the water comes up, if the water itself is kind of a slurry, that's already telling you a lot about what you're drilling.
The water is already a slurry, because of the drill cuttings. No matter what you do, as soon as you start drilling, you're going to be making drill cuttings, and they're going to come up to surface. Sometimes there are cavities within. Sometimes you'll hit a fracture zone, and drill cuttings can just go take off within those fracture zones. Doesn't mean they're meaningful, but yeah, anytime you drill, you've got metal grinding on rock, and that metal is going to win over the rock strength and convert that rock into basically a fine powder.
Okay.
Doesn't matter what rock type it is.
Yeah, well, I'm that's the kind of thing I'd know if someone would take me on a site visit. But hey, is the thesis of there being a sub-basin, that was basically one of those questions, unanswered questions that you're setting out to answer, is that coming along with this drilling? Do you know more about it now?
I don't know yet. Again, we need to wait for some of the chemistry to come back, because to identify a sub-basin, either you have to hit the sandstone directly, that would be the sub-basin, or there's something called a paleoweathering profile that typically occurs underneath the sandstone in the basement rocks, and it predates mineralization. I feel confident that what we saw in our very first hole on Catharsis last year, hole number 1, the upper part of the drill hole, we saw paleoweathering profile, and the clays seem to indicate that, as did the chemistry. I think another area that we drilled, the last hole that we drilled for Catharsis this year, hole 16. Oh, hole 18. Oh, we drilled 11 holes. Yes, hole 19. I can do my math. Yeah, hole 19. Hole 19 might have hit a paleoweathering profile, but I have a sneaking suspicion that what we hit in the top part of that hole was actually hydrothermal alteration and not a paleoweathering profile. But again, need the chemistry, need the clay results to come back to to properly define it.
Okay. You're also well, but what else would you need to see? Like, would you have to see a different structural system, structural controls, or something else? They like, how would you define it?
It would be tough to define a subbasin just based on the structural controls alone. You'd need to have evidence that there was sandstone overlying, and the best way to do that is either hitting sandstone directly, such as what we have at Accio, where we do have a sandstone outlier that is completely perpendicular to the main Athabasca Basin, and we see the structural controls there because we drill right through it. If you didn't have that sandstone there, it would be very difficult to identify a structural control, a structurally controlled subbasin without actually having the subbasin present. So the only other way again is by trying to identify this paleoweathering profile.
Okay. And then you know that with the assays coming back. Fair enough. You are you asking for trio for rare earths as
Oh,
well?
of course. Oh yeah, we assay for everything. We
Hmm.
don't leave anything to chance.
Okay. What would the relationship of those rare earths be here? Would that complicate the geology or do something else for the thesis?
No, wouldn't change anything. We know we've got rare earths on the project. We've had high grade rare earths at surface in a couple of areas. One of which was within a biotite schist, which last time I saw something like that, I was working at Alsa's Lake, where we had freaking amazing rare earths at surface hosted within these biotite schists. So I do believe that there's rare earth potential on the Catharsis project. Does it complicate our uranium strategy? Not one bit. We're exploring for uranium using uranium exploration techniques. Can't explore for rare earths using the same techniques. So the rare earths are, you know, they're kind of pushed off to the side. We do know that they're there, and I wouldn't be surprised if we do actually see some. And that's one of the things with waiting on the rare earth, waiting on the assay results is sometimes you can see radioactive anomalies and you think, oh yeah, uranium, because my synth's telling me it's uranium. Next thing you know, they come back as rare earth elements. So there's that part of patience and waiting for assays to come back as well. So instead of us tooting our horn, being like, yay, this looks good. Well, I love rare earths. The markets don't seem to love rare earths, and it's hard to move something in Canada for rare earths as well. So again, not a huge priority for us, but if they're there, that's good. If they're not there, that's good too.
Well, but there's a reason, I suppose, why the market doesn't always give good value to rare earth projects, and that's oftentimes metallurgy. It
Yeah,
could be challenging. Would the presence of rare earths complicate your uranium metallurgy, or are they not hosted in the same rocks?
not hosted in the same rocks. They can be, but typically not.
Hmm.
And again, with us exploring primarily for uranium, we'd be looking for a uranium system, not a rare earth system.
Mhm.
Typically, when I've seen uranium associated with rare earths, it's directly within the mineralogy. It's uranium's been a part of monazite or xenotime, but otherwise, I guess it could be part of allanite or apatite too. But yeah, our strategy is focused on uranium specifically and not the rare earth play.
So
And
if you have elevated rare earths, like if you have rare earths on this project, does that necessarily mean that the uranium is not hosted in uraninite, or is it specifically monzonite, or how do you look at that?
yeah, it would depend on the results, depend on the mineralogy. That's something that we wouldn't be able to quantify or qualify, I guess, off the get-go just by looking at the core. We'd need to see the rare earth results incorporated with phosphate and uranium and try to make some stoichiometric comparisons and see if there's a mineralogy that makes sense for the rare earth results. See what's elevated along with them.
Okay.
That's typically how that's at least how I've done it in the past, and I've found it works very well.
Hmm.
You can identify certain mineralogies, certain rare earth mineralogies based on their stoichiometry and their chemistries.
You told me last time you're gonna do some met work on Accio. are you going to be doing any work on this drilling for charger for I'm sorry for this
Versus,
drilling as
no,
well?
no, no.
Yeah.
It doesn't help us at all doing met work on nothing.
Okay.
Catharsis is still an exploration play. Accio is something that we believe has potential to move forward. And so the met work for Accio is definitely important.
Right.
If we believe that we can mine that material and put it into a mill, then we need to make absolutely sure that that the mineralogy is right, that the metallurgy is right to be mined and to be put into a mill.
Right. Yeah. But too early for catharsis.
Yeah, we need a deposit for a catharsis. We need some screaming hot hits.
Okay. Yeah. Fair point. You're at Bear now. Oh, how much money did the drilling at catharsis after doubling, and how much money did that cost you?
About 1.8.
Okay. Was that on budget as expected?
Yeah. Yeah.
Okay.
Yeah. No, we had some money to play with. So we figured that it was the right idea.
Hmm. But do you still, I mean, you still have enough money to finish all the drilling that you started planned?
Absolutely. Yeah, no. So basically we had a $12 million budget for this year that we had to spend 12 million, and we just topped it up with an extra 1 million.
Okay. Fair point. So how much
So
money do you have
we
left
took
now?
sorry, yeah, we took nothing away from 2024's exploration program.
That's a good way to put it. Yeah.
Yeah.
But how much money do you have left now?
We still have of the 12 million, we still have 10 million, but because we threw the 1 million in, you can consider it to be 11. I have to speak in a very weird way because it's flow through. So the flow through, we have to spend 12 million by the end of this year. So we just spent two of that, but we took 1 million from a flow through that isn't due until next year and threw that into this program, if that makes sense.
Sure. No, it does.
Yeah.
Flow through stuff, but it always makes sense. And it's because it's not 2 full years, it's a calendar year that's kind of making it complicated here, I suppose. But anyways, it's you're at Bear now. How much money are you gonna spend on Bear?
Bear is not a large program. It should be about 750,000, maybe a million at most. But oh, beautiful targets. Actually, Cameron and I were just looking at some of the targets today, and oh God, they just look good. It's
How come? What kind of targets are those? How did you come up with them?
the same thing I've been using for the last decade or so. My exploration strategy really doesn't change. The only difference between what we're seeing at Bear and what we've seen at other projects is all of the work done at Bear was ground-based. Well, except for the VTEM survey, but VTEM in the basement rocks outside of the basin, you can basically consider to be groundwork. But the gravity was a ground gravity survey. They're both completed between 2006 and 2010, so relatively new. I trust the geophysics from that vintage, from that era, quite well because I used to use it all the time. But the ground gravity is the targets there. Some of them are just wow, just bullseyes, absolute strong gravity low bullseyes right on these conductor jogs.
Hmm.
There's stuff that we've targeted with sandstone cover. There's stuff that I've targeted outside of sandstone cover. I've seen other companies, specifically the people that I've learned from in my early days. I've seen them target and have success doing the exact same things. I've seen other projects up in the Thelon Basin where they targeted these same things, and lo and behold, there's deposits. Doesn't always work, as Catharsis has shown, and many other targets that I've also seen across the basin. But I find it's one of the quickest ways to make a discovery.
It's these EM conductors. I'm hearing about them a couple of times from different exploration companies. Um, in the basin, I think Fission Uranium has recently been talking about those too. They're targeting it on that side of the basin as well. Well, how does that make sense? Because you're a way different side of the basin, but targeting kind of the same things.
Yeah, because so an EM conductor most of the time in the Athabasca will be a graphitic schist. It'll be a rock enriched with graphite, so much graphite that the graphite is connected to each other along the entire strike length, and that provides an electrical conduit, so that when you send a pulse through whatever survey you're doing, that signal will carry through that graphitic lithology, that graphitic structure, and it will just keep going. And where the graphite weakens, that shows up in your EM profile. Where it gets super strong because there's so much graphite, again, that will show up. So it doesn't matter what part of the basin you're on. It's the same thing, really. You're just looking for graphitic rocks. Why is the graphite there? Well, that's the $1 million question that people have been trying to answer for a long time. Are they black shales that were metamorphosed and were rich in carbon, and during the metamorphose process, all of that carbon got turned into graphite? Quite possible. Is it a hydrothermal process that is part of a methane degassing nature, that methane gets converted into carbon? Quite possible. I've seen evidence for that as well. $1 million question. In the end, I don't think it really matters. All that matters is that there's a conductor there, and if you've got other geophysical anomalies to back up your conductor pick or reason to go along that conductor, then yeah, I think it makes sense. It doesn't matter. It doesn't matter the origins. You're looking for the last event that occurred on those conductors. And that last event is typically what brought in uranium.
Why I'm asking about it, or why I'm wondering about it, is because of the thesis, because you're working with this Athabasca 2.0 thesis on Baird 2, I assume, just basically across these all these targets, because that's how you picked them. But that's not necessarily what you find on, for example, the PLS corridor, is it?
Sorry, what do you mean?
Well, what fission is targeting, right? Because they're using the same targeting methods, is not they're not working with the same thesis as you're working. You explained that about the graphites, but that's where I'm coming from with this question, is that they're targeting a different type of ore body than what you are targeting.
Not really. Not
Okay.
really, because if you look at what both fissions have targeted, they both targeted conductors. Same with Arrow. For next gen, we targeted conductors with gravity lows. It's all the same thing. Again, because graphite is, a lot of people consider graphite to be the main structure. If you've ever held mass graphite in your hand or know what graphite's used for, it's a lubricant, because it's soft and malleable and can move between your fingers. And that lubricant, as I was talking earlier about the metasediments in contact with the granites, that buttress point. Well, if that buttress point is loaded with graphite, you've got a major slip plane. And that's where you're going to create your faults and your structures, just right along that slip plane, because that's what's going to move. As soon as you apply forces to it, your graphite will just go thump, and as soon as you move rock, you're creating spaces, you're creating porosity, you're creating additional structures that migrate laterally or upwards or downwards. And that creates the pore spaces. That's what drives the fluids. So what the fissions are doing on the west side of the basin, it's all the same thing people have been exploring for on the east side of the basin for half a century now. It's looking for those conductors, because presumably graphite is the best fault corridor.
Okay. Fair point. That makes sense. It's just really
Yeah. So
a broad geology look at the Athabasca Basin as a whole, instead of looking at it project by project basis.
yes. So whether you're underneath the sandstone or outside of the sandstone, that thesis doesn't change. It's just you're looking for graphite because potentially the graphite was the best structural movement in that area.
Yeah, makes sense. And that essentially makes maybe your exploration strategy, although still risky, maybe a bit less risky, lower risk, because you know exactly what to target.
Yeah, I think it's less risky because we simply don't have a lot of sandstone to drill through. I think it allows us to, by drilling outside of the basin, I think our approach, by drilling conductors with associated gravity lows and magnetic features, I think that provides us with a quicker exploration approach and the ability to hop to more targets. We're not drilling down 400 meters or 500 meters. We're drilling 150, 200 meters. Boom, stop, done, move on to the next one. So I feel that budget goes further and we can do more.
So at Bear, that's also the targeted depth is 150, 200 meters.
Yep.
Okay.
Yep. Shallow mineralization.
How many holes are you going to get out of that $1 million that you told me about?
About 6 to 8. Depends on the depths that we do want to go. If we're seeing encouraging alteration in structure, we'll keep a drill hole running deeper. But yeah, between 6 to 8 holes.
Okay.
Should be.
How long is it going to take you to drill him?
Theoretically, not long at all. It should be a 3-week program, maybe 4 at most.
Okay, so at the end of that program is when you want to have the catharsis results out, and then you move to Accio immediately or simultaneously?
Simultaneously. So Accio is actually, we're going to start Accio, not drilling, but we're going to start working on Accio in May. We've got an ANT survey that we'll be deploying right away in May. And then we're also going to be, I think a week or 2 after that, we'll have a gravity survey, ground gravity survey, starting to start at Accio and go down that southern structural corridor for about 15K. But then we'll also have camp being built at the same time, which is why we have not prioritized drilling at Accio right now. Just we wanted the snow to melt, the winter to be a little bit more comfortable. The weather to be a little bit more comfortable, and then we can rebuild our camp. We were renting it previously. It cost us an arm and a leg, so we got it out, bought our own structures, which is already a big saving. And that will carry it'll reduce our drill budget this year, or sorry, our drill cost, not our drill budget. So we can put more money into the ground where it should go.
Right. Comfortable winner. I thought you knew how the Athabasca Basin was, which is not. I don't think it's a comfortable winner over there, by the looks of it. But good. Building the camp. End of May results from Catharsis. Okay. And then, well, it basically sounds like you're going to have news pretty much all throughout the summer.
Exactly. Yeah,
Okay.
nonstop news. Because we'll have 2 drills operational on Accio and Hook in June. We'll have one dedicated to Accio for the full year. Then we'll have an exploration drill working around the project on other target areas we've wanted to drill for a while, but just haven't got around to it. And once that drill is done, then it will bounce back over to Accio, and then we'll have 2 drills going on Accio. So yeah, lots of news, lots of drilling, lots of results.
What are you doing in the meantime? As in you personally going up to site, or are you doing a lot of marketing, trying to tell the story even further?
Yeah, trying to tell the story, trying to get some new exposure into Baselode, as I think it's kind of critical. Our share price has been hammered, absolutely hammered, and we're at all-time lows. Like we haven't been this low since we listed publicly. We've had some of the best results from any uranium company in the last 2 years, consistently. Accio is probably one of the shallowest high-grade mineralized zones, globally, but we still haven't appreciated it in the market. So just really trying to get the message out to new people, educate people, which is still ongoing, and there's still some things brewing for Accio that I hope will help a lot of people understand, just waiting for us to get to Accio so we don't really construe the narrative between Catharsis and Bear and Accio and confuse people. But that's my big push. I do plan to get up to site this year. I'd like to get up to Bear. I just don't know if my timing works because I do have a couple other things on the go. But personally, I don't have to get up to site, to be honest. I've just spent the last 16 years of my career working up in the bush. I know what drill operations are. I know exactly what's going on. I can understand from drill dailies that I see and from my team that goes up there. I have nothing but the utmost respect for them and have nothing but full confidence in that they know how to run the projects, which they have efficiently and effectively. So I don't need to go up there and micromanage or see if we hit something big. Yeah, I'll go up there in a heartbeat. But if we're drilling dusters and no mineralization, I don't see why I really have to get up there.
Well, hopefully you're not. So hopefully you just have to get up there to look at the core, which is very mineralized. That's at least my hope here.
And that's a site plan for Accio later on this summer is planned. So
yeah.
maybe when I do get up there, maybe I can have somebody somebody accompany me, a ginger.
Two ginger. Hey, you're a ginger too. Two gingers attack
Yes.
you. They'll get too much. Is Cameron's not a ginger? He's just blonde, right?
I don't know. I've questioned that too. I think he is a ginger, to be
Yeah.
honest, or dirty
He's a
blonde. But
concealed. Yeah.
yeah,
Anyway, we'll make him come
ashamed of
on
his
as a
ginger
ginger.
heritage.
Yeah,
He's Scottish,
exactly.
and Scots are gingers. So.
Yeah, it's true. Actually, he's McKay. Yeah, yeah, that makes
Yeah.
sense. To go back to telling that story, though, how do you do that? Where do you go? What kind of investors are you looking for? Where are you getting the best response on? Because you know you've been in Europe, you've done an Asia, a little bit of it. Where are you focusing your marketing on?
Europe and Asia, because that is where I feel that we are the most deficient. We've marketed a lot in Canada and USA in the past few years, so I know that people in North America know the Baselode story. They know us, they follow us. We've any of the big analysts from the big companies know who we are. They're not covering us, but they know who we are, and the sophisticated people know Baselode. We're included in both the Sprott ETFs as well. So the not gonna no that's the right eyes are on Baselode. But again, we haven't put we haven't put our full foot out there in Europe or in Asia, and we're still trying to build up our just our presence out there. Get to know people, they get to know us, they get to know what we're about, they get to follow us for a year or two, and just try to develop those relationships on a little bit more of a long-term scale. So just a bigger push into new markets.
Good. Yeah, well, I like hearing that. And I hope you're gonna have success in Asia. Asia is definitely an interesting market that seems to be growing from what I'm hearing from other people as well. So yeah, I think I'm all out of questions here. What am I forgetting to ask you? Though? What else should we be talking about here?
It was an interesting conversation. I think we hit a lot of different tangents, but I you asked all the right questions. We, catharsis was great, but we need the assays to come back to fully confirm. I guess, yeah, to go back to catharsis briefly, we had the two target areas that we drilled that were basically 4 kilometers from each other, but they're on a V. So we had the first area that we drilled, and then we drilled, I can't remember the name of it because we used a different acronym when we were drilling, but we had one that was just west of there that we also hit alteration that we highlighted in the news release as one of the target areas we like. Those two areas are part of a structural V system. And that V is 4 kilometers of untested potential structure. So if we're seeing the same type of alteration here in structure here on these two areas, and you've got 4 kilometers in between, well, that starts looking perspective. So if we're going to see exciting results from the assays in both of those areas, I'll be jumping up in joy. So catharsis has got a lot going for it still.
Hmm.
I never talked about the 2023 drilling where we hit a structure that we've seen uranium bearing fluids, the presence of uranium bearing fluids occurring within that structure, and we still haven't followed up that area. So there's so much going at catharsis, it's unbelievable. Bear has me freaking excited again for the bullseye targets. Oh, they look right. They look right. So did catharsis, but difference between catharsis and bear was ground gravity. Catharsis was airborne gravity. That's a big difference. Airborne gravity, I think, is still unproven. It's gotten a lot better than what it has in the past 10 years, that's for sure. But I think it might overplay a gravity low, whereas the ground gravity, which I've used for decades, like since 2008, I know how to use those results from that company, from the surveyors. And what we're seeing at Bear is freaking juicy. Oh, just fingers across. So I'm not gonna be sleeping well until we start drilling. And yeah, that's just my luck. But then we've got catharsis, or not catharsis, then we've got Accio and Hook, which are again looking freaking phenomenal. But we don't know until we drill. It's all these things that keep me up at night. We just need the results to follow through so I can finally have a good night's sleep.
You basically want to drill them all at once.
And that's this year though. That's the plan for this year. Investors are looking at uranium. Investors are looking at the uranium space now. We could have done all of this in 2021. Nobody was really caring back then. Yeah, the hit at Accio did wonder for the share price, did wonder for the company. But look at 2022. Everything just dive bombed. The whole market just died. So I'm happy that we didn't make a discovery back then, like a new discovery aside from Accio back then, because it would have been wasted. But now that things are hot, uranium market's taken off. We've got long-term contract pricing at $75, $75 a pound.
Hmm.
You know, most of the times when I sit there and do number crunching, I use $70 a pound. So the things are already looking far more perspective that way. And that price has so much room to grow. And the spot price has so much more room to continue moving up. Now, a lot of people say, "Oh, uranium price is down." No, it's not. It's not down. Stop saying that, people. It's up. It's up from $16. It's up from $30 a pound. It is up to a good level and will continue rising. It's not down.
That's one way to put it. When you're drilling at the now bigger programs at these places, first times at some of these places, how are the locals dealing with that? Everybody happy up there with your drills?
Yeah, absolutely. We consult with everybody before we start drilling. We've got exploration agreements for Catharsis, Bear, and Hook Project. And yeah, it's all part of the exploration strategy that we set off to do originally. We've always on every project we've always consulted before we hit the ground. There's no doubt about that.
Well, I know you consult before that, but then sometimes once you're there, things could change. So that's why I'm asking about it. Like, have they come up to check out the drills and say like, okay, you're doing a good job, keep on doing it, or yeah.
Yeah. But for all of our projects, and especially this last Catharsis project, we invited some of the locals up to see the program. They were very happy with it. They liked what we were doing. We got them there before we drilled. We brought them back as we were drilling, and we brought them back after we were done drilling. Very happy with it.
Okay. And then you're planning on doing the same with Bear?
Yep.
Okay. Good. Good. Well, good, James. I think I'm all out of questions here. This was indeed a wide-ranging conversation. Hopefully, get you in an interview in the next 4 to 6 weeks to get some of the results from Catharsis. Give me an overview there. But yeah, thank you so much for doing this.
You just jumped over Bear. Why? Why would you just jump over Bear when it's so exciting? No, hopefully we're talking again within 2 weeks with a new discovery out of Bear. But
Well, that'd be good, but you wouldn't have assays out of Bear in 2 weeks.
don't need it. Sint. If we're hitting whoppers and we get off-scale radioactivity, oh hell yeah. That'd be great to talk about.
Sure, I'd be
One
happy
can
to
dream,
talk
one
about
can
that.
dream.
All right, well, thank you, James. Then speak to you sooner than I expected, but than expected. But I'll let you drop off now because I'm already moving on here. Not too far away from the Athabasca, actually, because I'll be talking to Killian Charles, the CEO of Brunswick Exploration, which is a hard rock lithium exploration company with 3 lithium discoveries and 725,000 hectares of land holding across different jurisdictions, with the focus being the James Bay area of Quebec, though. Companies listed under the ticker symbol BRW on the TSXV in Canada, where an average of about 50,000 shares trade each day, with a 52-week high of $1.14 and a 52-week low of 40 cents. With a market cap of $87 million and about 195 million shares outstanding today, this is a 45.5-cent stock, 46-cent stock. Adding up options and warrants brings us to about 217 million fully diluted shares. And Bob Wars from Cisco Metals, whom I've interviewed before, is the executive chair and, as far as I understand it, co-founder here as well. So the Cisco Group is involved in this. They own about 10% of Brunswick, while insiders own 35%. Family offices own about 18% of the company. And so that's leaving about a third of it in the hands of retail investors and whatever else may have you. Looking at the last financial statement, which is dated December 31, the company had about $13.5 million in current assets, $12.2 million of which in actual cash, as well as almost $1 million in a mining tax credit receivable. on top of other smaller receivables and prepaid expenses. That same balance sheet tells me that there is no long-term debt, but there are short-term liabilities to the tune of about $1.5 million, which was mostly made up by account payables and a deferred premium on the flow-through shares. That same statement also tells me that Brunswick spent on average over the entire fiscal 2023 about $215,000 per month on administrative expenses, but they spent about $670,000 on exploration expenses. Again, that'd be per month and on average over the fiscal 2023. And thus, between those two costs, basically, administrative expenses represented about 25% of the total cost. Although, again, I'm not including interest rate related expenses, and I'm also not counting the mineral rights expenses, which costed the company about $3 million over that fiscal year as well. As it always says, this is only a snapshot in time, though, so you are going to have to go to the company's website as well as setterplus.ca to look at the most up-to-date numbers in the official filings, because this is non-revenue generating company that is actively exploring and drilling, so spending money at the time. And that means that the financial situation will differ from filing to finding. It is your responsibility to at least pretend to be an adult and do your own research. Just like my wife, I'm certain you enjoy listening to me talking about balance sheets and numbers, but that's not everything we'll be talking about. Again, three groups of projects really to talk about here, spread across Canada and as of recently Greenland. Quebec is the focus, though, so that's where I'll start. There are 5 high-priority targets here, with that being, well, you can probably see it on your screen right now. I'm not even going to pretend that I know how to pronounce all of them. The 3 grassroots lithium discoveries here have been made since they started, and the idea is to keep drilling those and hopefully expanding them, basically. Mirage is one name that I can pronounce, though, and luckily for me, this is also the main target here for now, and the initial 5,000-meter drill program outlined what looked to be 3 major mineralized trends containing at least 6 pegmatite dikes spread over a combined strike length of 1,500 meters, so that'd be 1.5 kilometers. And the most recent news release on Mirage is from this week, actually, April 25, and it shows highlights of 1.6% lithium oxide over 58 meters, starting right from surface in what is this newly discovered 6th dike on the property. It was actually discovered with the previous drill program, not with this winter drill program, but they're following up on it now. And this result also extends this MR6 dike another 80 meters to the south, but the company says that it's still open in all directions. Again, something I hope we can discuss later on. This is only a small part of the drill program that has been announced this week, though, and this drill program started in January with 35 holes being targeted, and so there are 32 holes that are still going to be released over the next couple of months, targeting the extensions of those 6 pegmatites that I was telling you about. It's also not the only drill program that's currently ongoing, and a maiden drill program was also started on Elrond, if I'm saying that correctly, another one of the James Bay projects and it was started in late February, I believe. Yeah, again, multiple other projects across multiple jurisdictions, including Canada and Greenland. And although the focus of the conversation, I'm assuming, will be James Bay, it might actually be a good idea, Killian, to start with that news release from about a month or so ago, where you announced that you're growing your land position. And my first thought was, how come? And I mean, it looked like it still looks like you have a good thing going in James Bay. And then you go and start looking at an Arctic island of all places. So why the rush?
Yeah, you know what? I think before I even breach that, I think it's important to talk about the philosophy behind Brunswick exploration.
Sure.
Our view was that there's a generational opportunity when it comes to lithium exploration. This is something that we've collectively never seen in most geologists' career. The closest comparable I can really think of is the uranium boom in the 1950s, whereby you are looking at almost discoveries. It's slowed down right now, but definitely last year and the year before that, almost on a weekly basis. We became almost blasé to it, where we were so overwhelmed with new discovery after new discovery that we took it for granted. But when we look at other industries, let's say copper or gold, we're not seeing discoveries happen on such a quick and fast rate. And so that was always the mindset behind Brunswick, where this is a commodity that we have collectively, and I really want to emphasize, collectively ignored systematic exploration, systematic grassroots exploration across the entire country of Canada. That's why, 3 years ago, when we truly started this program, We sat down, did our homework, understood the exploration model, understood the exploration strategy and techniques that we can bring to bear when it comes to lithium, and start the program. And so our view was, you know, collectively over time, the James Bay region has been shown to be not just rich in lithium, but almost the start of a new lithium district, global lithium district. That's what is, you know, happening right now. When you look at Winsome, when you look at Corvette, you know, hopefully Mirage as well. Those are all projects that are relatively proximal to each other, and there's still so much more to be found across that portfolio there. But our view was, look, across Canada, we would read reports from the 1950s, 1960s, where they would go on pegmatites and they would write no economic interest. And sure enough, a discovery would have been made there. And so that really drove us to say, well, you know what? We need to do basic exploration across the entire country. And that's what we did. We did, you know, the Atlantic provinces, Nova Scotia, New Brunswick, Newfoundland. We obviously did Quebec. We did Ontario, Manitoba, Saskatchewan. And as you mentioned, we've now added even Greenland to the mix. It has nothing to do with our current project slate. We are here to discover mines, all right? They so happen that we want to discover lithium mines, but we are here to discover mines. And so our focus is to maximize this opportunity for our shareholders. Eventually, the discovery rate will slow down, where it won't be almost on a weekly basis that you're finding new lithium discoveries as an industry. It will slow down. And my team, it's a team that's probably seen the most rocks across all of Canada, most pegmatites across all of Canada, because they've gone ahead, we've gone ahead and explored in every province. We've seen hundreds, if not thousands of pegmatites, refine our exploration model, refine our exploration technique, and demonstrated that it works. And so we have this team and we want to leverage it. That's why when we started looking at where else can we actually find anything of interest, where else are people not even thinking about looking for lithium? Greenland is actually somewhere I've been thinking about for the last 2.5 years. All the ingredients are there. We like to call it an Arctic island, but I would actually argue that objectively speaking, the infrastructure is just as good, if not better, than the James Bay. You know, James Bay is fantastic. We have road, we have power. But what we're missing right now is things like rail, right? That's what's a key item we're missing. And if you take a look at the areas that we're going to be exploring in Greenland, they're actually all by tidewater. So it's quite easy for us to put it on a boat and send it out wherever it needs to go. Does it need to go to Europe? Does it need to go into North America? This could even go to China. And so that simplicity is a huge advantage that no one really understands and you know, is at the forefront of how we explore. There's many areas across the entire country which, geologically speaking, are excessively interesting, but we're looking for mines. And I've said this many times before, and I'll say it again. A diamond mine, your product leaves in a briefcase in an airplane. In a gold mine, it leaves in a, you know, bricks armored truck to a bank vault. But any raw, bulk, base metal commodity needs access to infrastructure. You need to move tons. And we didn't want an infrastructure project with a mine attached to it. We wanted a mine with maybe a bit of infrastructure needed. And that's why we ignored huge swaths of the country. And in our process, it's perhaps unsurprising that as we went ahead and eliminated, you know, hundreds of targets across our portfolio, we made our discoveries in Quebec. Why? Because there's a geological endowment in lithium that is absolutely staggering in Quebec, right? If we think about all the best discoveries that have happened over the last 4 years, since 2020, where are they all located? James Bay. It's not to say that there's no other discoveries outside of the James Bay, but bar none, up until now, the best ones have been found in the James Bay. We had happened to have a great portfolio and consolidated a great portfolio in that area, and we will continue to grow and consolidate a great portfolio, and we will continue to make discoveries. This is separate from Mirage. Again, we're looking for mines. It's a hard truth and it's a hard reality. You know, we're not afraid to look at an asset for what it's really worth. I'm not here to waste time or capital, because I know those are two things that are important to my investors and to the overall market. If an asset doesn't show the potential of being a mine, then I will not spend more dollars on it. If an asset doesn't demonstrate the possibility of being sizable, then I move on. And that's the great thing with Mirage. Every hole we've put into it answers that question. Hey, does it gonna have a be a mine? We keep saying every time, we keep trying to kill it and we can't. That's what exploration is about. It's about killing assets. And the ones that you can't kill, those are gonna be the real deal. And that's what we're doing in Brunswick. We're here to kill assets. So we're gonna keep pushing Mirage. We're gonna keep trying to kill it so that our investors know that we're not wasting time and that every drill hole we're doing has the benefit of, you know, of being best positioned to advance this asset. And so that's the drilling we released this morning, was exactly on that basis. We made a discovery late last year. We wanted to push around it. The drilling we've done in our campaign is focused on finishing up some of the undrilled targets. We still have so much more to do at Mirage, but this can happen concurrent to the rest of our portfolio. No one explores like us. No one has that same large-scale visibility on lithium opportunities across Canada. No one churns as many targets as us. Everything that we have is now going to be graded against Mirage. If Elrond can't be as good as Mirage, then I'm not going to waste any time. I'm here to kill assets. If Elrond is better than Mirage, great, fantastic. I think that's what I like to joke around and say it's a bit of a Hollywood problem, but that's not a real issue to us. We can look to monetize, we can look to grow, we have opportunities. Companies that have assets are companies that can grow. And that's what we want to focus on Brunswick. We want to walk and chew gum at the same time. We want to advance Mirage while still leveraging that expertise that we've built over the last 4 years. And it's something that I think is an important differentiation factor. So yes, we are going to be back in the field at Mirage. We're going to be back there drilling because I believe there's still so much more to do. The assays that we're going to be releasing over the coming weeks are going to underscore the potential that we see at Mirage. But beyond that, I'm also going to have my exploration team continuing to seek out new targets, continuing to push the envelope when it comes to lithium exploration. Because as I said at the start, this is a generational opportunity. One day, that discovery rate will slow down. But until it does, Brunswick will be at the forefront, trying to push the envelope, trying to make as many discoveries as possible. Because I don't want to look back 5 years from now and say, well, gee whiz, I wish I pushed a little bit harder. We knew what we were doing. We knew how to look for it. We could have made that discovery, or we could have been there in that area before anyone else. That's what we're doing in this company. We want to push the envelope. We want to shake things up more so than anybody else out there.
With the black background and the way you're talking, someone would think we should be talking about Shakespeare, and I agree. That'd be nice. But is the plan? The idea is still to have over 4/5 of the money go into Mirage, though, right?
Absolutely. Look, when you think about from an exploration perspective, one of the key things that we recognize early on is that if you know what you're doing, you can be efficient. All right. People forget exploration is not about saying yes quickly. All right. You have years to say yes to building a mine. What you need to do, and this is the same thing that investors do every day, is the ability to say no. When you see an investment opportunity come across your desk, whether it be in mining, in lithium, in tech, in pharma, in any other space, in retail, you need to be able to say no quickly. Does this make any sense? You need that ability to filter out the waste so you can focus on the winners. And exploration is absolutely no different from that. And one of the key things that we've developed at Brunswick is a structured approach to being able to say no rapidly, oftentimes in the matter of minutes. And so our ability in the field to distinguish between a high priority target and something we want to flush has to happen quickly. You know, we like to put out that number, hey, how many hectares we have. I'll be honest, it does not matter. Internally, we don't care about that number because it's always a moving number. Every day in the summer months, it's always a little bit tricky when there's snow on the ground. In the summer months, my team is out there saying, Killian, you know what? We went to go check this out. There's nothing there. And 99 days out of 100, they will tell me, Killian, there's nothing there. And that's fine. It means they're doing their job. Because exploration, I just need that one, not 1 in 100, I just need that 1 in 1,000, right? That actually becomes a mine. We believe that that's mirage, but we believe we can find more out there. So I'm okay if every day they tell me, Killian, we didn't find anything. Great, we're going to churn through it. That means I'm spending dollars to eliminate targets, but I'm spending a small amount of dollars. I'm spending a small amount of time. And so to go back to answer your question, absolutely 4/5 of, like I'm saying all these things, but 4/5 of my budget's going to go towards mirage because it's drilling. It's something that's important. It's something that's sizable. And we have to make sure that we can say yes to it. Now, for the rest of our portfolio, it's cheap, it's fast, it's efficient. That's why, you know, I would be surprised, and that some investors probably saw us going to Greenland and talking about Labrador and talking about Nunavik as, oh, well, there's nothing going on in the rest of the portfolio. Maybe mirage is not as good. And I say, no, I reject that. Again, I say we want to walk and chew gum at the same time, that we can do both, that we see the potential and opportunity of doing both. Because one, mirage has its own dedicated team to it. It's now along sort of that, say, development, because there's still a lot of exploration happening up there. There's still more discoveries to be made, but it's a little bit more on its own path, all right? And then when it comes to the rest of our portfolio, we can be fast, we can be efficient. What if I find another mirage? What if I find something better than mirage? Well, we won't know until we go and test it. And we won't know until we send people out in the field. And that's something that is significantly cheaper than drilling mirage. And that's why it can stay in the background. And then just keep it growing. We're going to churn through those numbers. Those numbers move up and down. The amount of hectares move up and down. The amount of targets moves up and down every day. Because ultimately, we're just looking for that 1 in 1,000. But we're making it into a numbers game so that we can find more things like mirage out there. And, you know, that's what drives us every single day. We want to make sure that people, when they feel pride in being involved in Brunswick, whether at the investor level or just working for Brunswick, that they're making an impact to make discoveries. That's what any junior wish they could do. To say that we have mirage, to say that we've demonstrated the model and found 2 other ones, I guess we're greedy. That's not good enough for us. We want to do more. And then again, every program we're going to do, we're going to drill. We drilled Elron. We're going to drill Anatical later this year. And we have that base. Again, keeps coming back to mirage. We can compare it to it. Is it going to be better or is it going to be worse? If it's going to be worse, no sweat off my back. It just means that we've killed it and we moved on. And again, we have mirage. That's 4/5 of the value the company should be there. And then the rest is just an extra bonus, right? And we don't want to waste people's time.
What does it take for you to kill a target? What's suboptimal? What kind of grades or widths are you seeing? And you're saying, okay, if I see that, I'm moving on.
You know what? For us, it's very simple. When we started this, we actually took the time to look at mines all over the world. All right, not exploration assets. We looked at the lithium mines. We said to ourselves, okay, this is what we need to be looking at in the industry. We need to be finding what's out there. If I find lepidolite, I don't care. I'm here for spodumene. I'm not here for pedolite. I'm here 110% for a spodumene discovery. So then ourselves, again, we're saying, okay, well, the best mines in the world have scale. Things that are small, a couple of meters, 10 million tons. It's not enough. It's not good enough. It might be fine right now, but on a long-term basis, as this industry matures, because it's important to remember, lithium mining is immature. When you compare it to copper, when you compare it to gold, zinc, lead, pick a commodity, it is at its infancy. The mines of the future are still evolving in terms of what is the best mine out there. And so when we look at our portfolio, absolutely scale has to matter. You know, if I can't demonstrably do 40, 50 million tons, or at least show the potential for that at a grade of at least 1.3 lithium oxide, then I kind of feel that I'm sort of wasting my time on an asset. That's the type of project that we believe has the best chance of being a mine. It's so hard to go through all these steps, to do the permitting, to do the drilling, to do the feasibility studies, or I should say the economic studies, to raise the capital, to do all of that work, to raise the capital to build it, the risk to build it, that you want to make sure that you have one of the best assets in the space. Imagine doing all that work to end up with a 4th quartile mine because it's too small. And after 2 years of production, you shut down because the spodumene price dipped 5%. That makes no sense to us. And so that's what we're focused on. You know, we want to see 10, 20, 30, 40 meter widths, just the type of stuff we've been putting out at Mirage. That's why we're so confident about it. Because every time we go ahead and drill it, we see exactly what we want to see. We see the grades we want to see. Again, this morning, 58 meters at 1.6. That's a hell of a hole right there, right from surface. No strip, just mining right into ore. Doesn't get better from that, from a mining perspective. That's the type of things that we want to grow. That's the type of things we want to expand upon. That's the type of thing that drives us, that we want to see. And if an asset we work can't show that potential, then I'm going to wash my hands from it. I'm going to maybe look to monetize it. Maybe it makes more sense in the portfolio of somebody else, or maybe we just simply walk away. We can't have that fear. There's an obsession in mining to admit that a project is not going to work. And we're not afraid to admit a project's not going to work. We'll just drive on from it. We'll do everything necessary to get there. But if I can't make it work, then that's fine. Then I'm not going to lie to my shareholders. I'm going to move on, and we're going to focus on something else. So we have that internal bar right now. We have Mirage. And so everything that we're going to discover, everything that we're going to work, if it can't hit that bar, then we'll say, look, you know, we tried it. We maybe spent a few $100,000. It's not there. That's fine. We're turning the page on it. You know, it's a pyramid. It really is a pyramid. You have a large base of assets at the bottom, right, that we're churning, we're constantly getting rid of. And then slowly, you know, it's only a few that move to the next stage where it's worthy to drill. And then it's only a few more that get to go to the next stage after that and demonstrate their potential. So it's a very cost-efficient way of exploring. It's the way any major would explore out there, right? They would do the exact same thing. And so we're bringing that mindset back into exploration. We're trying to demonstrate that, you know, a lot of juniors, they make a discovery, they put the blinders on, and it turns out it's not good enough for them. And all of a sudden they've got to make it work. So they're trying to stretch the truth and, you know, work at certain angles to get it there. We're not like that. We don't do that over here. We want to focus on finding mines. And so there's very clear guidelines as to how you want to work that. Infrastructure, grade, scale, metallurgy. Those are all things that need to be answered as quickly as possible. And that's how we work.
But what is that specific answer then on grade?
Oh, yeah, well, look, like what? So grade. You know, you want to see at least 1.3. I'm sorry, but if you're not looking at grades of above 1.3 over widths that are anywhere from 20 to 30 meters at a minimum, then you're not in the space. Obviously, you have some factors, right? If I have 25 meters at 2.5%, well, that's the same thing as 40 meters at 1.2%, right? Those kind of work out to being the same numbers. But ultimately, you want to see that consistency in a project. And if you look at the drill holes we've been putting out for a while now, you're seeing that consistency. You're seeing the widths. You're seeing the grades. And again, all of these things are open. All of these things have potential to continue growing. That's perfect. That's exactly what you want to be seeing. And so that's it. When metallurgy, you want to make sure that you're dealing with, like, when you're in the bulk commodity space like you are in lithium, you want to make sure that you're dealing with something that requires the least amount of processing. That means you need clear, white, pale color spodumene crystals. If they're clear and white, that means they're probably going to have no impurities in them. That means they're going to produce an on-spec, on-specification, no impurity concentrate. If you're dealing with large spodumene crystals, it means that you're more than likely going to avoid having to use a flotation plant, lower capex. You know, it means that you might only do DMS, which means, you know, you're not dealing with official mine tailings. It's easier. There's less processing that happens. There's less chemicals used. That's exactly the type of things you want to see in a mine, right? Those are all things that we're looking for at all times. That's why when we mentioned in a press release That's why we'll often, when we started off with Mirage, we would talk about the color of the spodumene crystals and the size of spodumene crystals. And that's why it's important that other companies also do so. You need to do your metallurgical work down the line, but from the onset, you can start answering a lot of those questions, right? From the onset, you can have a feel for what the metallurgy is going to look at, or look like, I should say. And so that's what we incorporate into Brunswick, right? It's in our DNA. That's why we didn't go staking far from infrastructure, right? We could control that from the get-go. Everything that we've staked, everywhere that we're working, we need to see a solution to get that concentrate to where it needs to be in a economical fashion, right? Road, rail, water. Those are as simple as that. If I have road, if I have rail, or if I have access to a port, then I'm laughing. I know I can move it out. But if I have to move hundreds of kilometers to get to rail or get to a road or get to power, ooh, good luck to you. You know, we have history in Canada of that not working. You know, I mentioned it before in some other interviews. Izok Lake. You know, Izok Lake is a beautiful VMS, high grade, perfect, but it's out in the middle of nowhere. And we've known it since the 1980s. Probably one of the richest deposits in Canada, and it's unbuilt because it's out in the middle of nowhere, infrastructure matters.
Some days I wish I was more like a lithium spodumene crystal, because although I am white and almost too white, I am not as clear and I do have impurities. Let's talk about that most recent news release there. Good results, as you mentioned, good widths, falling within those grades that you mentioned here as well. But you wouldn't tell if you'd only look at the stock price. So when I look at the stock price, I'm thinking, okay, so the source of the boulders, or the Boulder River, or whatever you want to call it, has not been found yet. What do you think the market wants to see? Is that what you think the market wants to see? And why is it not moving up on this news today?
Look, I'll be honest. I think there's the asset itself, but you can't forget the overall market strength, right? You have experienced a period of time where the spodumene price and the overall lithium market, whether hydroxide or carbonate, has pulled back quite significantly in pricing, right? So there was obviously an effervescence in late 2022 into early 2023, where didn't matter what they had, it worked. You were able to raise money. And so right now you're experiencing a period in time that's classic, right? Where prices have pulled back, equities are focusing on, or the market's focusing on the main stronger assets. And so we're no different than our peers, right? But you can't stop working, because on a short, medium, long term, the outlook is very good for the overall market. And so I'm not going to stand still and do nothing and just spend money on G&A. I want to spend money in the ground. I want to grow the asset, grow the company, so that when the markets do turn around, then there'll be like, okay, well, which companies make the most sense? And he'll be Brunswick with maybe Mirage, maybe other assets, saying, wow, that's quite a company that they've built over the last 2 years, even in tough markets. You can't stop working. And so you're right. I'm disappointed in my stock price every single day I look at it. But we're not going to stop doing the work that we're supposed to be doing here. We're not going to stop, advancing our portfolio. And in due time, slowly and surely, we'll get over it. And once the spodumene price keeps on climbing, as the lithium carbonate price keeps on climbing, as the lithium hydroxide price keeps on climbing, we'll get over that hump. And then we'll be back into an area where there'll be a little bit more effervescence in the commodity, and there'll be a little bit more effervescence in the market. And so you'll have bigger reactions out there. That's normal.
I was only half kidding when I brought up the source of the boulders, by the way, because I actually do want to know about it. What's any advancement of that? Do you know anything more about it?
So we're going to work that a lot this summer. We're going to do a lot of more work. You have to remember, let's take a step back here. With the forest fires last year, we only really had access to the property in early August. We spent a month doing somewhat basic prospecting, and then we started drilling right away. We were still working the rest of our portfolio. We saw the potential at Mirage, but it's always, hard to say where it's going to go. But after these 2 rounds of drilling, the fall drilling we did last year, the winter drilling we just wrapped up, now we know it's something that we want to set ourselves into. So we're going to go back in the field and we're going to spend the time. You know, it hasn't even been a year. I mean, you look back on a lot of discoveries out there, PMET, Adina, you know, it's great to see what they've done up till now, or I should say Winsome, not Adina. It's great to see what they've done up till now. But, you know, they have that year or 2 or 3 in the case of PMET in front of Brunswick. I'm not saying we have the same assets. I mean, PMET is an absolute world-class discovery, but it takes time. Exploration takes time. That's why we don't want to stop, because if you stop, then you're starting from further back when you actually want to get going. And so absolutely, one of the key things we want to do is explain that boulder field, that boulder train. There's still so many targets that remain unexplained against around Mirage. Like we showed that core map. You know, again, I invite any investor to look, or potential investor to look at the map we put out, that figure 1 in our press release today. They'll see that 2.5 by 2.5 kilometer sort of core area. Well, we made a spodumene discovery late last year, 3.5 kilometers to the northeast. All right, it's undrilled. We haven't even spent much time around it, but we know it's there. So there's still so much more work to do across this project, so much more work to do across this property, that we have barely even scratched the surface as to what we can do here. It's great. And again, that speaks to assets that matter, right? Where they still have so much potential that every time you drill, every time you work, you're finding something new. You're growing the opportunity. It may not be, you know, the perfect drill hole every single time, but that's fine. You're still growing it. You're still driving it in the direction. You're still making a new discovery. You're still finding more spodumene. And that's absolutely what we see at Mirage. So, you know, we're really excited to be back there in the field this summer. We can drill year round, but, you know, snow is a hamper towards prospecting and mapping. You know, it's something that people kind of forget. You know, we're locked out 6 months of the year because we're looking for white rocks and there's white snow on it. So unless people are willing to go out with a shovel, it might be a little bit tougher.
Is that also when you're going to know more about the orientation of these pegmatites, or is this drilling already telling you more about that?
It's on a case-by-case basis. You know, the more work we do, the more we're able to tie into different assets. So some of them, we start to get a good idea of the orientation. Other ones, you know, look at the press release we put out today, MR 2460. That hole is the single one in the middle of the lake. We found 4 major dikes, all stacked, all near surface, especially a core area there of 2 dikes, whether it's the same one splitting up or it's 2, but they're side by side. 31 meters at nearly 1.5 or over 1.5%, right? 1.7%. Right there, 50 meters or 60 meters from surface. And so there's a single hole in there. So yeah, we show an orientation in that section, but until we put more holes around it, who knows what it looks like? Do they tie up together? Do they expand? What do they do? And so there's still a significant amount more work to do. It's normal. We're starting off. It hasn't been a year. We'll have done barely over 10,000 meters, right? And you look to other projects that are more advanced, they've got, you know, 30, 40, 50, 60, going up to 100,000 meters. We're at, you know, 10% of that. We're still so early in growing Mirage and showing the potential of that asset. And we're absolutely going to keep doing it for the rest of the year.
I'm happy you're bringing up that MR 2460 because you announced the evidence of the stacked dikes there. What's your internal thesis telling you about the processes and so the structural controls that are responsible for the formation of the stacks as opposed to one whole body? And will that change the way that you pick drill targets in the future?
So it won't change how we pick out drill targets. First of all, that setting that aside, pegmatites are tricky. It doesn't matter who you look at. Doesn't matter which sections you look at for which project, anywhere around the world, except maybe, you know, Greenbush in Australia, setting that absolutely ginormous, and Manolo in the Congo as well, setting those 2 aside from now, there's a lot of pinch and swelling that happens. And it's the same thing that you see at even Corvette in Quebec, right? Another world-class discovery. These things connect, disconnect, come back on the other side. We're now starting to have a better understanding of the structural control, but drilling is a troop machine. We need to put more meterage. Every hole we put in there allows us to increase our knowledge base in terms of how we want to move this forward. And so that's absolutely something that every day we're learning more about it. That's why we're excited to go back in the field this summer, because we're going to be armed with essentially 6 months of drilling, and we can really start to identify, okay, this is an area based on the mapping we've done, based on the geophysics. Maybe we're starting to see a structure develop here. Let's go see if we can identify anything in this area that could be, a new drill target beyond what we've done. But our view is very simple. Anytime we hit a pegmatite that contains lithium, that contains the right KRB ratio, that is fractionated, we need to put more drill holes around there, because you're going to see it. MR6, let's go back to MR6. Let's talk about MR6 again and give you that context. When we drilled it, it was 3 little outcrops that were 4 meters across. That's it. 4 little meters. That's all we saw at surface. And we put a hole, first hole into it was 38 meters. And today we just released a number, 58 meters. All right. You just can't tell. And it's the same thing even in drilling. You move, from that 38 meters, we move across and we drill 58 meters. And that's why you got to keep doing it systematic. Just like we're doing systematic approach exploration, lithium exploration at a countrywide scale, we also have to do systematic exploration at a project scale as well. We're trying to demonstrate that we have a mine. And so that's why in our mindset, we are advancing these things, looking to grow them, looking to understand the control. We don't know all the controls right now. We have ideas, we have hypotheses, but we can only test those hypotheses with more field work, more drilling. But even based on everything we've seen up till now, we're quite excited to continue growing these assets. We have a good idea of where they want to grow, how they can grow. Going forward, it's about, growing them and making new discoveries, even beyond what we found up till now.
Yeah, I'm glad you approached this from the perspective of what is this going to look like when and if it's a mining operation. What are the potential implications of the fact that it's not one continuous ore body, but it's those stacks with sort of gaps in between? What are the potential implications of the economics if there would be a mine there, or when there would be a mine there?
Yeah, so I would invite you to do a review of all 50 largest lithium mines in the world, which is what we've done. Only CV5 and Greenbush and Manolo are one major dike. Every single, one of the largest lithium mines in the world is owned by Pilbara Minerals. It's stacked dikes. That is the standard when it comes to lithium mining. That's what we normally look at. You typically have one larger dike, which is no different than what we're seeing here, but you typically see a variety of stacked dikes. Now, the width of those dikes matter. It is important. You can't have meter-wide dikes, but if you have stacked 10, 15, 20-meter dikes, that's perfectly fine. That's what it looks like. Kathleen Valley, all right, which Lionstown, which was the focus of what was it, $4 billion acquisition last year by Albemarle. Go look at sections of that. Stacked dikes. That's what it is. Pilbara Mineral, which is a $13 billion company. What is it? Stacked dikes. That's what it is. That's what lithium mines look like. You might have a good core, and that's what you see at CV5 from Patriot. You have a good core, but then all the other ones show, varying widths. And that one is something that's a little bit different, where it's probably been remobilized, it's probably been stretched out, there's a preferential pathway. But, they're going to mine it. They're going to have a long 4.5-kilometer trench, essentially, right? Or however they end up mining under open pit underground. We're going to have a more centralized location where we're going to have more dikes in there, right? We're not going to stretch it out over 4.5 kilometers. We're going to be in that 2.5 by 2.5 kilometer core zone. So what matters is mineability. Are you at surface? Do you have the grades? Do you have the widths? That's what matters. If you can answer those things, then it's fine. having stacked dikes is perfect because you're just building more tons in that same envelope, right? It's if I'm putting a pit shell on there, that's fine. If I have 4 dikes that enter into the pit shell and they're all 10 meters wide, I can mine those, no problem.
What about these little dikes, if you want to call them that, at the bottom of that whole 60? They look a little bit out of place. How do you even get there, and what's their deal?
Oh, look again. That's, to me, that's an exploration target. We're focused on anything that's 10 meters and bigger, right? That we can demonstrate that it's 10 meters and bigger. When we see something like that, that's an exploration target for us. Is it going to be is there something else around there? Do they connect? Is there going to be anything happening? For us, it's more of a question of, hey, there's mineralization that continues all the way to that depth. Frankly, no one's going to go ahead and mine a meter wide dike anywhere in the world. Unless you're in Africa and you're just putting DSO straight, in Zimbabwe, putting DSO straight to China because spodumene con's at $5,000 a ton. All right. So we have no connection. That's why look at what we highlighted, right? We highlighted and we discuss the areas that make sense for us. So when we talk about that hole, for us, the bottom, those few dikes at the bottom of the hole, yeah, great, they're exploration targets. Maybe there's something more to be found there. It speaks to the fact that the system, the overall geological system, is still active even at the bottom of the hole. I'm sure if we continued drilling, we would have found more. That's fine. Let's set that aside. But when we look at the highlights, that's not where our focus is. Our focus is on what's at surface, what's mineable, what's easily to reach, right? That's where we're going to spend more time.
So you're not going deeper even on the next drill program?
Probably not. Everything that we've done, it's not to say that every hole is shallow, but from our very simple perspective, we're focused at, for now, near surface targets. We still have so much work to do just near surface. Many of the dikes, we haven't gone below 100 meters vertical. That's nothing for an open pit. A lot of open pits go 250, 300 meters down. So it means we've only tested the first third of some of these dikes, all of these dikes, to be quite honest. So we still have a lot more work to do, and that's part of the job. That's what we're here to do. We're going to grow these things. And when I look at something at that depth, let's say at the bottom of 60, we decided to stop the hole. We're like, look, we could keep this going. We've got other works to do. This is something that's for future Brunswick exploration, or, maybe 10 years down the line, 20 years down the line, once they've mined all the easy stuff and they want to go after that. They want to see if there's potential there around that particular target. Maybe they all connect and form something bigger. I don't know. But ultimately, that's not what I'm focused on.
Is there a difference in the lithology or the style of mineralization between these holes and the previous ones when it was not stacked dikes?
No difference. No difference. Again, you'll see the same thing anywhere. Stacked dikes is just a term we use because we only put one hole into it. Maybe 10 meters away, they all connect into each other. And then it turns out that they're not stacked. They're just almost extensions that have broken up, let's say, right? So it's important to contextualize that from that perspective. Right now, we're describing them as stacked dikes, but until we've done more work, it's a bit of a moving target. We assume that they are sub-horizontal. We have drawn them in that fashion in that section, but until we put more holes, they could be vertical. We simply don't know. Now, from a mineability perspective, it depends what you want to do. If they're horizontal, that's great from an open pit perspective. If they're horizontal to sub-horizontal, if they're vertical, maybe you want to attack them, from a long hole mechanism. They could still work, in an open pit scenario. You just don't know, right? So that's why, again, we need to do more work. For us, these are just the baby steps. And we will keep growing this. And it's about seeing that opportunity, looking at this and saying, well, we drilled 31 meters at 1.7. Let's see how we can connect to it. We're 300 meters to the east of MR6. Maybe they connect all the way to MR6, right? Maybe we can grow MR6 to now, extend it another 400 meters to the east. And then maybe we can grow it further to the east. Maybe we can connect to other things we're seeing on the other side of that lake. There's just so many different things that we can be doing here. And that's why that's exploration. It's about growing these things as much as we can.
Yeah. And I'm glad you're putting the emphasis on maybe, because there's a lot of things happening that, again, as you said, you just don't quite know yet. You say more drilling, but you have more, there's 32 holes left to be assayed, right? Where are those holes coming from on the land package?
So they're coming again mostly from that, we'll call it northeast corner of the map, if you will. You know, this campaign, we wanted to wrap up a lot of the targets that we had left largely unfinished before, just from a pure exploration perspective. And now now that we're starting to get more comfortable after this campaign, future campaigns, now we're going to really look to dial in, right? We'll have done, if you will, the first pass. That's all we've done. It's just that first pass of drilling across our targets. Now we can go back and say, okay, well, now I'm seeing a center of gravity develop there. Now I'm seeing something, you know, that we want to expand over here. There's still more targets we want to go test, but we're starting to develop that overall size. That's, again, what we want to be doing. We want to demonstrate the potential of Mirage. We're not interested in doing infill drilling at this point in time. We can do that later. What we believe is valuable to our investors, valuable to the market, is to demonstrate the potential of Mirage. I'm not going to go put a drill hole, you know, between the one we released today and the one that we released in the last campaign. You know, 80 meters, oh, that's inferred, so then we'll put another one so we can get to indicated. No, that's not for now. That's for later. We want to show the potential. That's what we are absolutely focused on.
You say they mostly come from that northeastern end of it, if you will, but not only. Where else on the property are you sort of taking a chance on?
So look, it's again in that same core. There's a few around. We drilled, you know, to the northwest of the Boulder field. We had an end of campaign. We're like, look, we have a few holes we can park here. We wanted to try new ideas, new targets, new areas, just to see as we were sort of wrapping up. Because again, you know, here's an opportunity. We're there. We drilled south of MR6. We drilled southeast of MR6, just trying to develop new zones while we're still in those early stage. Because again, a lot of companies put on the blinders and then they forget about the potential of their asset. And then people walk away and say, well, I guess that was it, eh? It was only a little bit of work here and that's it. And we don't believe that. We believe that we need to show the potential of this asset.
Okay. Yeah. Fair point. You also said that you don't want to do infill yet. I don't think anybody blames you for it. It's still very early days, as you mentioned. How many meters do you want to put into this thing before you come out with an MRE?
Well, that's a tough question. Honestly, I don't know. To me, it's one of those things where, you know, when you do an MRE, you're sort of putting a box around yourself to a certain extent. And we want to make sure that we've captured a lot of data as much as possible. You know, the great example is Winsome. They put out their resource. They had like 25,000 meters of assays waiting to incorporate into a resource. So look, we'll get there, but for us, it's not a race to get to the MRE. For us, it's a race to demonstrate the potential. The MRE will come in due time. Eventually, we will have enough assays, enough drilling to put something out there. But they didn't do anything before they did, I think it was around 30,000 meters of drilling that they felt comfortable with a resource. We're at 10, right? So we got to triple everything that we've done before we even start talking about anything that looks like an MRE.
Well, that's good enough guidance. I mean, if you say that you don't want to do it before 30, that gives me an idea of also when you might want to get there. The size of your next drill program, is that going to depend on what comes back from the assay lab on those 32 holes?
No, it absolutely does not. It's unrelated to that. You know, the size of a program, I don't want to say it's irrelevant. It's obviously something that can be discussed, but you know, we view it as a continuous process. You know, when we're going to be back in the field at Mirage this summer. Honestly, my preference would be to never stop drilling. That would be in an ideal world. Just keep it going. Don't stop it. We've got targets. We've got places to go, and we're going to keep doing it. And look, that's our objective. We're going to keep doing it until we either, find like, I keep saying that word potential, demonstrate that full potential or kill it. That's what it boils down to. And if we're not killing it, then we're going to keep drilling it. Honestly, it's that simple. So yeah, size of the program this summer or that we want to do in the coming months here. Maybe we write 5,000, maybe we write 10,000, maybe we write 15,000. I mean, ultimately, it doesn't matter. We just want to keep making sure that as we're drilling, we're showing the potential, we're growing the potential as much as we can.
Keep drilling until you kill it, or until it kills you, as in you have no money left. How much money do you have left right now?
So look, right now we have enough money to do all of the work that we want to do this drilling. Do more drilling at Mirage, do prospecting across the entire country. But we're always careful. I would like to do absolutely way more. If somebody said, Killian, here's $50 million non-dilutive, I'd be saying, perfect. I'm going to go spend every one of that penny at Mirage and just, go as hard and as fast as I can. But market conditions are a reality that we have to be careful about. And so we try to balance it as much as we can. I view it as a faucet, a spigot, right? Where exploration, when the markets are good, I can open it up a little bit more. When capital is more available, I can open it up as much as I want and just, get a torrent of drilling, of exploration going. If the markets are weaker, we're going to just slow it down, maybe, to a midstream, maybe even down to a trickle. But we always want to be moving. That's the most important thing for us, all right? If a mining company, a junior exploration company, stops to do work, then what's the point of investing in them? You might as well own the underlying commodity, because all that's going to happen is you're paying G&A fees and dilution. Wow. That's not how we look at it. We want to keep moving the needle in the context of the market. If the markets are weak, we work a little bit slower. If the markets are strong, we work a little bit faster. But we can be adaptive. We can be reactive. So that's why when we talk about how much meters I want to do, I mean, a lot is the simple answer. But at the same time, the long answer, it's going to depend. We think about phase. We try to simplify it down to phase so everyone can sort of follow along. But it's a bit of a moot point. Ultimately, if we see more availability, if we want to approach this and grow this asset, then that's what we'll do. We will absolutely grow this asset, just at the right stage, at the right time, with the right amount of capital.
Well, you mentioned G&A there for a second. 2023, I calculated administrative expenses to have come around $215,000 a month. Is that what you're planning for 2024 as well?
Yeah, no difference. The team is growing, obviously. Projects grow, teams grow. Those kind of go hand in hand. But, our focus is to spend as much dollars as we can in the ground.
Yeah.
That's what it's in the service of. We want to focus capital in the ground always.
I just want to talk about financing and something that you said before, because I've been thinking about how lithium companies are going to keep financing themselves, as in, do you keep doing traditional financings they're basically lower lows financings, or are you thinking of doing something more creative? You have enough land where you told me that's not the point, but I mean, you could even do prospect generating on it. You can get some option agreements. There's other ways to get capital into the company outside of traditional financings, but what's your preference?
You know what? Ultimately, the same way when it comes to exploration, financing have to move the needle, right? There needs to be a strategy. If I'm raising money to raise money, what's the point, right? It needs to make sense in the terms of why, how, and who. Why am I financing? To do what type of work? How am I financing? Is it a strategy that is beneficial to the company and existing shareholders? One of the benefits in Canada is We always have charity flow through to obtain a strong premium on our stock to limit that dilution. And then the last one is who, right? Who are we bringing on? Who are we partnering up when it comes to investing or raising that capital? If it's a hedge fund, how's that going to benefit me? Right? They'll look for that 10% gain and sell it in my face. But if it's a long-term partner, be it institutional, could be one of the Quebec institutions, be it corporate, then I know that I'm raising capital, but I'm raising capital with a partner that is going to be there and that benefits my existing shareholder base. So absolutely, we have a number of strategies in front of us, and that's the important part. Companies, junior mining companies, die because they lose in terms of options, because they have no more choices in front of them. They have to take this dollar. They have to take on this investor, even though they may not want to. And so the more opportunities we have, the better chance we have of doing something that is beneficial on the capital raise side to all investors. And it's the same challenge that's in front of every single company. Some companies ignore it to their own detriment. But again, we think about it every day. You know, again, I would like to do more work, but it has to make sense. If I'm going to do more work, then maybe I want more capital. But if I'm doing more capital, who's coming in there? What type of investor am I bringing? Do they share the same vision that I have in Brunswick? And if the answer is yes, and they're aligned with existing shareholders, then that makes sense. If everyone's moving the envelope in the same way, then new and existing shareholders all benefit together. It's that simple. It doesn't have to be complicated.
Simple, but potentially not easy, because who is that investor? Like, do you go looking for them in Japan? Are they actually in Quebec? Do you want to keep it Canadian, and so on and so forth? Those things make it maybe not easy.
Look, that's my job, right? That's what I'm paid for. And is to sit down with my team, with my board, where we've all done this in the past. We've all brought in great partners at projects, you know, at the corporate level. That's fine. We've done it before. So it's about, again, looking at the options in front of us and figuring out which one is most beneficial to everyone. Which one is beneficial, not just to the company, but to the investors. You know, if the partner is in the best partners in Japan, then the best partners in Japan. The best partners in Canada, the best partners in Canada. That's fine. We just have to make sure that we're moving in the same direction forward, that everyone is in lockstep, that I'm not bringing on a shareholder who's going to, you know, because he has a better position than existing ones, is going to look to benefit before existing ones. You got to remember, you just mentioned it right at the start. Go back to that start where you were talking about, right? That share structure. Who's my number one shareholder? Bob Wares, Robert Wares. He owns over 20% of the company. I mean, I'm not looking to screw him over. He's right there with every single investor. And so when we do deals, I don't want to dilute him down to 2% of the company. That doesn't make any sense. I want to make sure that I respect his position. And if I respect his position, then by definition, I'm respecting everyone else's position. It's that simple.
Yeah.
Those are all shares that he bought. Those are all shares that he put money into. Those are not, you know, shares at day zero where, you know, he loaded himself up with 1 cent paper. No. He was there investing in the company, growing the company alongside everyone else.
Is the government in lockstep with you on that as well? Where I'm coming from with this is basically think about subsidies or grants or something like that, or is that something more in the development stage?
I'd say that's a good question. You know, a lot of focus right now is all on the development stage, but that's only going to go up to a point. I'd say that it's not just local government, it's all governments all around the world. They are waking up. They are making things like metallurgy, capital to help metallurgy, which is something that most investors don't feel like financing because they'll say it's boring, and that's fine, but it's important. And so there are funds available to do that, to do metallurgical work. There is more capital. Obviously in Canada, we have, in a way, government support. It may not look direct, but it is It is there in the form of charity and flow-through financings, right? Those are an indirect form of government support that does not exist anywhere else in the world, right? Where the government takes on a bit of a tax loss, but knows that it generates revenue, it generates jobs, it creates mineral wealth for the entire country and its population that eventually gets taxed. So it's a win-win proposition, and that's a form of grant. Now, it's great in Quebec because we actually do have groups and organizations that are there to help companies grow. Whether it's the Caisse de dépôt, whether it's FTQ, CDEX, there's a plethora of groups that are there to assist and help companies grow in a long-term sustainable fashion.
There's a change coming to that, if I'm understanding it correctly, to the flow through financings.
So it's I don't want to say it's technical, but yes, it's more a case of the premiums going down. So it's not so much that there's a change, is that because of new laws like alternative minimum tax and how certain taxation happens on capital gain, premiums are going to trickle down. But premiums went up, went down. It used to be that for any mineral exploration outside of Quebec, you would have 30%. And then they added critical minerals, brought it to 50%. And when Charity started, it was at like a premium of 1.5, a multiple of 1.5 times the share price. And then it grew to 2.1 in Quebec. And now it's back down to 1.8. Like, people stress out and freak out moving down. But I mean, again, take a step back. Look at the larger context of the situation. Yeah, going down, but they're still better than they were before. It's just we got used to them being the absolute 110% best. That, you know what, 90%, like, it's like I tell a lot of people, 100% is an A, 90% is still an A. So if I'm being graded and I get 90%, I'm still getting that A. That's still a 4.0 on my GPA. I'm still going to be real happy about it, right? And so people forget to put that context in. It's like, oh no, it's the end of the world, the sky's falling. Well, you're still getting an A, guy. Let's take a deep breath. You're still going to be fine.
Yeah.
You don't have to worry about it.
All right, well, I'll stop worrying about it now. I think I'm all out of
Look,
questions.
it's good questions. It's good questions, but context matter.
Sure.
You got to take a step. Everyone, collectively, myself, the industry, everyone, investors, take a step back. Look at the larger context. Look at what other people are doing, how it works, how it used to be, and how things have evolved. We often forget. Let's put it that way.
Yeah. When's the next time we're talking? When's the next news release?
I mean, look, we're going to be putting out lots of drill holes over the next couple of weeks here, and then we're going to be right back in the field, doing what we do best.
Batching them, you're not going to drop them out all at once, I don't assume.
No. Obviously, we're getting good turnaround, so we should be able to batch them into good groups here going forward. But for us, we want to get those results out there and then go back. It's what people are paying us to do. Go back in the field. It's what I want my team to be doing. I want them back in the field. No one's paying them to sit in an office here in Montreal or in Chibougamau or in Quebec City or wherever they may be. I want them out in the field.
Yeah. I don't want to be paid double if I was sitting in an office in Montreal. But Killian, this has been fun. I appreciate the overview and I appreciate the conversation. Again, I'm all out of questions. What am I forgetting to ask you here, though? What did you come here hoping to talk about, but I'm not bringing up?
Oh, we covered everything. We're here to do exploration. We're here to find mines. That's what it boils down to. If people walk away with one thing, that's what we want to be focused on. That's what we want to be remembered on doing. And my God, we're going to go ahead and do it as much as we can.
Good. Well, again, thanks, Killian. Maybe next time we'll talk about Shakespeare. For now, though, I'll let you drop off because I'll be moving over to another lithium company for which I'll be traveling to Argentina, where I'll be talking to Gabriel Rubacha, the CEO of NOAA Lithium Brines, which is, again, as you might have guessed it, indeed a lithium exploration company with brine assets in Argentina. The company is listed under the ticker symbol NOAL, so that'll be NOAL on the TSXV in Canada, where an average of about 35,000 shares trade each day, with a 52-week high of 90 cents and a 52-week low of 22 cents. with a market cap of $34 million and about 128 million shares outstanding. Today, this is a 26.5-cent stock. There are about 88 million warrants ranging between 20 and 60 cents, as well as 5.7 million options at 50 cents, which brings us to about 220 million fully diluted shares. Management owns about 16.5% of the company. Non-managing founders own about another 16.5% of it, and then another 20% is owned by the seed investors. So call those insiders, if you will, as in one group. About half, so 46.6% to be specific, is in the hands of retail and institutional investors. Looking at the last interim financial statement, which is dated September 30, the company had about $4.7 million in current assets, $4.6 million of which in actual cash, as well as a small portion of receivables and prepaid expenses on top of that as well. The balance sheet also shows me that there is no long-term debt, but there are short-term liabilities to the tune of about $1.4 million, which mostly made up by related party transactions and fees payable to the CFO, the CEO, the previous CEO too, and directors, including share-based compensation. That same statement tells me that NOAA spent, on average, over the last reported 9 months, about $150,000 per month on what I would call corporate expenses, and this is without counting the listing expense and share-based payments again. As to the project expenses, the same statement tells me that the first 9 months of the last fiscal year resulted in almost $6 million of exploration and evaluation expenses, putting the average at about $660,000 a month of exploration, with drilling itself representing about 40% of the total cost, and the rest being spent on mainly camp costs, consulting, analysis, stuff like that. Overall, this statement tells me that G&A, again, without counting the listing expenses and everything that occurred around it, so the corporate expense, if you will call it, counted for about 18.5% of the total spent, and the exploration to G&A ratio was at about 4.5. As it always is, though, this is only a snapshot in time, so it's a snapshot of a 9-month period to be specific, so please do head over to the company's website as well as setterplus.ca to look at the most up-to-date numbers for yourself, because this is a non-revenue generating company that is also actively exploring and drilling its project, researching its grounds, and so on and so forth. That means that the financial situation will differ from quarter to quarter, and it might be different by the time you're listening to this. I know you love to listen to me talking about numbers and financials. That's all very fun, but that's not the main focus here today. The main focus for NOAA is the lithium triangle, which I probably also don't have to explain to you is one of the most prolific spots in the world for lithium brines, for looking and finding lithium brines. And pretty much all the big companies that you think of are operating somewhere in this region or have some kind of an involvement here. NOAA specifically has 3 projects in the region, but the majority of the exploration dollars that I told you about earlier have been going into Rio Grande, which is a 370 square kilometer piece of land that NOAA controls 100% of. It's located in the Salta province, of course, of Argentina, so it's on that side of the lithium triangle. And not long after its maiden drill program, NOAA came out with an MRE based on only 4 holes, and those were about 600 meters each. But it showed 2.3 million tons of LCE for the total resource, and that's, of course, Li2CO3 equivalent at an average grade of 612 milligrams per liter. And again, I probably wouldn't be talking to Gabriel here if that was everything, though, so it's not. NOAA believes that there is upside potential here, given that less than 15% of the land package here has been drilled and explored, and a recent news release from about 2 weeks ago came out showing that the 5th hole from this drill program, that will, by the way, drilled about 2 kilometers to the southwest from hole 3 and to a depth of, again, about 600 meters as well, has intersected near-surface lithium mineralization with an average concentration of about 460 milligrams per liter. So naturally, I expect this to be the focus of the conversation here today. But again, that's not everything, because NOAA also owns the Arizaro project, which is 70 kilometers away from Rio Grande. And although actually Rio Grande is smaller than Arizaro itself, with Arizaro covering 440 square kilometers. This is right next door to another company I recently spoke to, with that being Lithium Chile, who came up with that 2.6 million tons LCE resource in 2022, as you might remember. Not much work has been done on this project so far, but a geophysical anomaly suggests that there might be a reason to go and poke some holes into it eventually when Well, I don't know. Again, hoping to hear more about that later on in the conversation. And then a bit further away from Rio Grande, so that'd be 250 kilometers from it, is where NOAA controls a smaller piece of land to the tune of 92 square kilometers, carrying the name Salinas Grandes. Not much to talk about here either, because again, NOAA's claims on the Salar have not seen much work on them either, besides again some geophysics. So hoping for an update here as well, but this might be a good time for me to start shutting up, because clearly there are already enough projects to talk about. This actually might be a good point to start the conversation off, Gabriel, because as I mentioned, there are many companies, including majors, active in the lithium triangle, right? And that's been the case for at least a couple of years now, as lithium went through that phase there, which to me really raises the questions: if the grounds that you have are as prospective to eventually get into production and so on and so forth, why didn't they get them before you did? Like, how did you get your hands on this before they did?
Hello, hey, Antonio. I mean, the first thing is that we put together this land package that we own in NOAA in 2022. At the end of the day, we currently got 140,000 hectares of mining properties, basically among the three projects that you mentioned: Rio Grandes, Arizaro, and Salinas Grandes. Then we got the small pieces of properties in different salars, but the core assets are in those three. And the way that we acquired was like putting a puzzle together. We acquired different properties from different private owners, small pieces, and put it all together in this puzzle that we made. Most of the properties that were already taken, I mean, when we started in 2022, most of the mayors already controlled most of the salars, and we started getting properties outside of the salt crust of the salar. I mean, because what you see as a white part of the salar is salt crust, but the brine basin is much larger. It goes much beyond these borders. So we acquired a lot of properties in the alluvial areas. That is pretty much what you got from another company like Galan Lithium, that got all their properties in the alluvial areas surrounded Salar del Hombre Muerto, and they got 6 million tons LC of resource. So this is what we did, and we've been doing this for pretty much the whole 2022 before we got this company listed in early last year, March 2023. So it was a work that we've been doing for quite some time, considering the experience that we got the founders in Argentina and in Salta in particular. That's the other thing that is worth mentioning. All our properties are in Salta because we believe Salta is probably the best jurisdiction, not just in Argentina, but probably as a mining jurisdiction in the region. So this is part of what we decided, that try to focus as much as possible in the province of Salta.
Okay, I do want to talk about that and how that's going to influence your future, especially given the Canadian relationships with Argentina recently. I want to talk about that as we move on. But before we do any of that, I also want to talk about the rocks and what you've been doing recently, what you've been coming up with. As I mentioned, that fifth hole. As you're stepping out to these other targets, are you seeing any variations in the lithological package here, or is it all the same?
I would say that the fifth hole was drilled within the salar. The fifth hole is we drilled 3 holes within the salar and 2 in the alluvial areas, one in the north and one in the northeast. I would say that concentration in the northeast is much higher. The concentration of lithium in the northeast, in the alluvial areas, is much higher, and the porosity in that area is much higher than within the salar. So the lithology, I would say that it's better in terms of we can get out of this area. As a matter of fact, the resource that we estimated 2.3 million tons, 80% is concentrated in the northeast, and not much is within the salar. Even, I mean, both things. Porosity is lower, and the properties are much smaller than what we got in the alluvial areas. But this is consistent with other projects that we saw, that companies that are drilling in the alluvial areas, and they found out that the concentration in some cases is higher in these areas, and the porosity is much better. So it is consistent what we found with other salars.
What about the presence of sulfate intercalations here within the lithology with this whole 5? Is that something new? Is that something that could be a challenge further on, specifically during production, or how do you look at that?
No, we don't see that as a challenge. I mean, it's pretty much similar to other salars in the region, so we don't see that as a challenge. As a matter of fact, one of the things that we are planning to do during this 2024 is start working on the flow diagram in terms of conceptual design in terms of process. So this is what we would like to start working based on the actual chemistry that we got in our salar. So we are in conversations with an engineering firm that in order to start doing that. Our plan for 2024, and you mentioned something in your intro, is to expand the resource. We drill approximately 12% of our mining properties. And so what we plan to do during 2024 is to start drilling in the south and some areas in the northeast that we haven't explored yet. Obviously, this is not going to be a linear that we're going to have a resource 9 times as high as we got now, but we are confident that we can double based on the geophysics that we just completed in our properties. Then we're going to do some pumping wells in order to start experimenting on the capacity, the flow that we can get out of the salar. This is the second thing that we plan to do. Water, we already identified sources of water for industrial use. That is, and we got some areas within our properties. And the fourth thing is what I just mentioned regarding start working on the conceptual design, conceptual flow diagram as in anticipation to a potential PEA towards the end of the year.
The end of 2024, that is.
Yeah.
Okay.
Yeah.
That'll be interesting. Why I started asking about the sulfate intercalations here is because I'm just thinking if they might pose a problem for metallurgy, but you're telling me all the other projects that are producing also have those same type of lithology, right?
Yeah, I mean, the chemistry that projects like Rincon, projects like Mariana, where Ganfeng is currently operating, or Rincon, where Rio Tinto, Argosy, and others are operating, got pretty much the same chemistry as we got. The only difference is that we got much higher concentration of lithium than what they got, but we don't see as a challenge. Again, this is preliminary. We want to engage process engineers in order to help us with that. But the preliminary studies that we did is that we don't see that as a challenge going forward.
Okay. Good. Well, I'm as you can see, I'm not too well familiar with lithium brine deposits myself, and that's where I'm coming from with these questions. And another one of those type of maybe silly questions that I had is that when I look at the assay table with that news release of hole 5, the first intercept is about 350 milligrams of lithium per liter, and that grade then sort of climbs to over 600 milligrams per liter at about 200 meters deep, and then it slowly drops off to say about 450, 460 at the end of the hole. Is this grade variability normal for these types of systems, and what is creating the high grade in the middle of the hole here?
I mean, it may be different things. Maybe in some areas you may have a dilution, or you may have a more concentration, but it is normal. If you see the first hole, we got the upper part with close to 500 milligrams, and the bottom part close to 800 milligrams, with some areas that we had even close to 1,000, more than 900 milligrams. So it is normal that you get certain variability within the well. At the end of the day, once you get, that's why it is important to get a pumping well in order to get, okay, what is going to be the average that you can get out of the well. That is basically because when we start production, it's going to be pumping well. You're going to drill the average that you can get out of the hole.
Yeah. Okay. But so grade variability is not necessarily going to be a challenge here when you do
No.
that. Okay.
No, as a matter of fact, one of the things that probably are good in our case is that we don't have in the resource estimate that we did, we don't have a cutoff grade. Most of the results, the 4 holes that we used for the resource estimate, were all above 400 milligrams per liter, or 300 plus milligrams per liter. So we don't have any cutoff, or so means that pretty much all the brine got a very good grade that can be used for production. I mean, or at least for estimate. So we don't have anything below certain threshold that are not going to be used.
Well, and you mentioned that's actually a good point when you say all the, the entire brine has good mineralization above this 400 milligrams. What about the spatial distribution, though, of the mineralization at depth here? I mean, the intercepts appear to be sort of in patches of a couple of meters, followed by, call it 10 or so meter gaps. Why is it like this, and what does that mean for you?
Because the porosity is different, so you can get some areas that you can get the lithology that you get is permeable to get brine. Some others that you can't. The other thing is that, as I said, the porosity or the in the alluvial areas probably got a very porosity, so you get pretty much all the area that you are going to be able to get brines. In the north, it was like 2 aquifers that you had there, so very well defined 2 areas. The upper part with the different grade than the bottom part. So it depends of the area that you are drilling. And within the salar, I think it's more homogeneous than on the alluvial area.
Okay, yeah. I'm sorry if these questions sound silly to you. Again, I'm
No,
just
no.
not interested in how these things work. They work different for different resources, right? So,
Yeah.
and I might be approaching this sort of with my gold and copper, very little knowledge that I have. But anyways, but basically, this hole is not necessarily going to change your approach or exploration strategy or anything forward. It's just confirming what you had already drilled.
Yeah, I mean, the 5th hole confirmed what we did so far. Once we start drilling in the south, probably it's going to be different because it's going to be a completely different area. Our neighbors, Plus Petrol, have been drilling in close to that area as well. Unfortunately, Plus Petrol is a private company, so we don't have the luxury to know what they are doing or their results. They got our reports, and so they got our information. But we are confident that we can get a good results there as well. We don't know if the concentration is going to be as high as in the north, but it's going to be consistent, I would say, with in the neighborhood of between 500 milligrams, in that neighborhood, plus minus something. And again, we plan to complete to cover the rest of the areas in the north. That this is another well that we're planning to drill there. And we are confident that the results are going to be consistent with what we already got. We believe that, I mean, there are two things here in Rio Grande that is really different. There are not many from the last few projects that have been explored. That most of them are low grade. I mean, most of the recent discoveries are low grade. And in our case, having an average of 612 milligrams per liter allow us to go, to at least to have the flexibility to develop this project on the traditional approach, evaporation, rather than rely 100% on the development based on the DLE that still provides some risk on the development of the project. So this is something that we believe that is a unique comparison with other peers or some other projects that are in similar stage as we are. And the second thing in our company that is that we don't have any commitment with offtakes, partners, so we still got a lot of flexibility going forward.
Another point that I want to talk about later on when we talk about the offtake agreements or how you take this forward as a whole. But does what you're telling me here, does that mean that you're not necessarily going to be looking to drill deeper on those next holes or in other parts of the project?
Deeper, no. We believe that, we haven't reached a bedrock in any of the holes that we drill. We drill pretty much in the neighborhood of 600 meters each. Based on what we know of our neighbors, they drill a little bit deeper than we did. There is a risk associated with going deeper. So our plan is to continue the next few holes pretty much the same, 500, 600 meters, depending on what we'll find in each one of the areas. But this is what we are planning to do. We don't believe that going deeper will provide much better results than what we get right now.
Okay. Talk to me maybe a little bit about Juana Azul here as to how you picked that to be the fifth place. To be like, why wasn't it the first one, or why wasn't it the last one? Like, how do you prioritize targets in the first place?
We decide. Let's go back in time a little bit. We decided to start in Rio Grande because in 2011, 2017, two campaigns were performed by LSE. LSE was acquired in 2018 by Pluspetrol Litica. But there was a lot of information available from this salar for these two previous campaigns, shallow wells of 50 and 100 meters with concentration in the order of 350 milligrams per liter. So, and some of the holes that were drilled at the time were pretty much close or on the edge of our properties, the properties that we have within the salar. So we decided to start drilling. Our campaign was decided in order to first validate our hypothesis that the alluvial areas in the north and northeast got A, lithium, and B, higher concentration. So instead of hunting in the zoo, going drilling within the salar that we knew for sure that there was going to be lithium and probably higher concentration than what it was drilled before, we decided to take the risk and drill in the alluvial areas in the north in order to validate the hypothesis and unlock value on those properties. That was the first hole, and the results were pretty much aligned with what we thought at that time, with the bottom part with close to 800 milligrams per liter. And then we went to properties within the salar. We started in the farther south in order to include the properties there. And then we went again to northeast. And the last one, Juan Azul, it was this located in that particular place in order to cover the rest of the properties that we got within the salar. That was the idea, but pretty much the focus was northeast. There was no information. We need to validate that, and then within salar there was a lot of information. I wanted to confirm that.
Okay, so that's okay. I get that that's the idea, but how do you prioritize targets? When I say that, I'm basically talking about what's the combination? Is it geophysics, geochem, something else, regional geology?
In 2022, when we acquired the properties, we performed geophysics, so we knew where to drill outside on the north and northeast, that there was no information available at the time. And then we took the previous two campaigns for the properties within the salar, that there was a lot of information available there. So that was the basis, or at least the basis that we took in order to define the exploration campaign.
Okay. When I look at the map of your concessions here and your land, basically it looks kind of sporadic, like they're not, it's not continuous, right? Are there any plans for you to I don't know, try and consolidate or get more land? I know you're dealing with that huge private company that's a multi-billion-dollar company, I think by now. I don't even know how they're still private, but yeah, talk to me about that.
Just briefly, Plus Petrol is an oil and gas company. That is a private oil and gas company, so they got big pockets, not just because there are other activities. They recently sold one of their properties in Pastos Grandes to Ganfeng Lithium for close to $1 billion. So they got big pockets, so they don't have any need to go public in this business. But having said that, there are not many other properties available in Rio Grande. It's pretty much the other big land owner in Rio Grande is Plus Petrol, and then there are minor companies drilling there. We are the second largest landowner in Rio Grande. Based on what we found, as I said, 80% of the resource it's located in the northeast. Probably just going to be, we believe that we're going to unlock additional value and additional resource while we start drilling the south. So that will provide continuity on the east side of the salar. But besides that, the rest is going to be minor things within the salar, and we'll use that, and it's going to be spread. But there's no way that we can consolidate more land package in Rio Grande.
But spatially, that's not. I mean,
No.
you don't think it's going to be a problem? You can travel in between them. That's not an issue.
No, it's no issue. As a matter of fact, we share the roads with Plus Petrol. There's no problem to circulate and to move around the salar. There's no issue whatsoever.
Good. Well, you alluded a couple of times to it, sort of your plans for moving forward and where exactly you want to go and drill here in Rio Grande. Let's maybe just kind of put it on a map chronologically. Where's the drill right now? Where are you moving it to next?
As I said, 2022 we want to focus our activities in unlock additional value for Rio Grande. Our target is by the end of this year, early next, be in a position to get all the information that is going to be required to start a PEA, so we can have a more economic evaluation of what's the value of Rio Grande. And this is what we're planning to do and focus all our attention there. Previously, we thought about doing some further exploration in Arizaro, where we got close to 80,000 hectares there, twice as much we got in Rio Grande. But we thought it would be much better 2024 to dedicate our resources, capital and human, in Rio Grande than diversify our focus. In the case of Arizaro, we recently announced that we engage PI Financial as our advisor to look for a potential partner that can partner with us to develop Arizaro. Arizaro, we believe that it's a little bit more complex and it's not as homogeneous as Rio Grande. We got a much larger land package there, so may require more capital. So we thought that that would be the right approach for Arizaro. And probably towards the end of 2024, once we complete this campaign in Rio Grande, start thinking about Salinas Grande. That is a small package, as you well mentioned in the introduction, 10,000 hectares, but still got a lot of value. Salinas Grande is one of the salars that probably got very good chemistry in terms of low in contaminants, good grades in the neighborhood of 500 milligrams, and another advantage is much closer to the capital city of the province of Salta. So the infrastructure is much better, the access is much easier. So I got a lot of advantages to develop there. So this is pretty much the time frame and what we are planning to unlock additional value for our shareholders in 2024.
What would a preferred deal be for Arizaro? Do you want to get an option partner on it, or do you just want an outright sale?
No, we want our ideal deal would be a cash out and earn in. So cash out so we can allocate additional resources for Rio Grande, and then earn in certain cash out so that our partner can earn X participation in the project, and then earn in Arizaro in exploration that can allow this partner to get up to certain percentage of Arizaro at the project level.
And in terms of permits, licenses, how far up that process are you?
Permits are already in place in one of the properties. That is the one that we plan to start, and the rest are already submitted. We are not pushing hard on the permits. They are already there. We're gonna get those permits during Q2, but we are not pushing hard in order not to expedite more than necessary the permits. But the permits are in place and they should be granted during Q2 in any case.
Okay. Well, I'm talking about the permits, or where I'm coming from with this, because I'm thinking about if someone wants to buy Arizaro, they want it to be drill ready, basically. So that's the permits that you're talking about, right, Arizaro?
It is drill ready, I would say. All the permits are already, all the paperwork's already there. It's just a matter of expediting in order to get it. One of the properties, it's already in place. It's drill ready with the permits, and the rest should be granted during this quarter. again, we are not pushing hard because we are not planning to drill on our own, and we are waiting for that in Q2 once we get a partner to start.
Okay.
It's not we don't see any issue there.
Right.
Yeah.
Same case for Rio Grande. I mean, you can just do whatever you just outlaid for me. You can just go and do that. There's no hurdles.
No, we got all the permits there.
Okay.
But it's work in progress.
Okay.
And Salinas Grandes, we got all the permits in place it's ready because we got all the permits in place.
There's no local population or anyone else opposing it. Any other difficulties?
No, as a matter of fact, Rio Grande, there are no communities nearby. So, Arizaro, the local communities are very supporting of the mining development in the area. And in Salinas Grandes is shared between two provinces, Salta and Jujuy. But on the Salta province, I would say that the communities are very supporting to the development of the mining in Salinas Grandes, while on the Jujuy side it's not as friendly as it is in Salta. So communities is not to Salta.
What does that mean? Not as friendly, as in they're blocking roads?
There are certain conflicts in Jujuy in this particular case in Salinas Grandes, which is not the case in Salta.
Does that complicate things from a regulatory perspective too? The fact that it's split between
no
two?
Regulatory, no. It's just to get the approvals from the community. You have to submit for their approval, and that's the only thing. No, nothing else.
Okay. How hard is it going to be to get their approval? What are you doing to get the approval?
In the case of the project in that particular area in Jujuy, it's complicated, I would say, because of the many communities that are in the area. Again, it's not the case in Salta. That is completely different.
Would it be so? Well, eventually, again, forward looking and stuff like that. But if you want to go there and drill it, would you be able to drill only on the Salta side of the? Oh,
Yeah.
okay.
Yeah.
All
our properties are on the Salta side.
Right. Okay. Sure. Okay. Talking about this and yes, very forward looking and all that, but come time for you to do a transaction, and not only in Arizaro actually, but eventually I assume you also want to do a transaction on Rio Grande as well. How do you think the Canadian government will react to that, given the recent history of bureaucracy challenges, if you will, in the lithium triangle? A lot on the Chile side, but how's that going to be for you?
If you're talking about potential deal with Chinese company, it's going to be complicated. It's going to be complicated. But having said that, there are certain ideas that in order to make it more reasonable, I would say, because it doesn't make much sense that for being listed in Canada, no assets in Canada, no anything in Canada, you have this restriction. So it doesn't make much sense because we know, for example, and the same case of other companies, with no assets in Canada or even North America, we got the restriction from the government of Canada. So there are some ideas to change that. Having said that, there are many other players around. Besides the Chinese companies, I'm talking about the local players, oil and gas companies from all over the world that want to be involved right now. Indian companies that wanted to get involved in lithium. Japanese, Koreans. So there are many others. Obviously, everybody wants the Chinese. based on the the offers that they did in the past for the companies, but it was a different time. We no longer are in the 70 plus $1,000 per ton. Probably we're gonna get back to the 20s or in that neighborhood, but I don't believe that we're going back to those numbers. But I think there are other alternatives to the Chinese, and we'll see how it goes.
Yeah, well, everyone likes people who buy irrespective of price, right? They just secure supply at any cost, basically, has kind of been the approach so far as I understand it. Is it only the Chinese companies that the Canadian government has an issue with? And I suppose right now, yes, but what about in the future? Are they going to start?
It doesn't say specifically, but I would say if Russia, North Korea, and China are the three countries I would say that are blacklisted. Let's put it this way. It's not the case, but it's pretty much associated with that.
Interesting. When you say you want to change your listing potentially here, what would that look like? You go to the US, you go to London, you go someplace else. What would you want to do?
If we are, I mean, based on the restrictions the Canadian market got right now, other markets I think are going to be much better than Canada. London, Singapore, Australia probably got the same, will have the same restrictions of Canada, but delisting from Canada or changing jurisdiction got a lot of tax implications that so it's a bit harder to jump for a junior company that so it is difficult right now to do that, but I don't believe that this is something that it's very attractive, I would say, for companies that wanted to list companies in the market. If we have to go back in time and be in 2022 again, probably we would list a company somewhere else, not in Canada.
Yeah. Well, death and taxes, right? The only certain things in life. What financial situation? Give me an update on that. How much money is there in the bank?
Not much. We are the market is not helping in any way. Market are terrible right now. What we are doing is we are in discussions with some potential strategic investors, and while we are doing that, we are exercising warrants, founders and seed capital. We are exercising warrants in order to provide additional cash to the company. We recently announced $1.2 million that were exercised and were allocated to the company, and we're going to continue exercising warrants in order to minimize dilution in this terrible market while we secure additional financing from other sources. So we are very, very short in cash, but again, we are providing additional cash as we move along by founders. As a matter of fact, it was announced a couple of weeks ago. I personally provided a loan of $1 million US to the company because, again, we do believe that we got a very good story. So founders/management, that's pretty much the same people. Hernan and myself are providing a lot of cash to the company as needed in terms of exercising warrants and provide the cash that is needed. While we, again, secure additional sources of money with these discussions we've been having with different partners. different parties. I'm sorry.
Loan, that bridge loan that you provided to the company with that was announced with the last assay results, but well, technically, as far as I understand, it's a convertible loan essentially. So you might choose to convert that into shares. What's the interest expense on that for the company?
No, it's a little bit more creative. I had a lot of exposure to LAC, to LAC. So I sold some LAC shares in order to provide the cash to the company. So the loan is associated with the LAC share price. So it's going to be the repayment is based on the LAC share price. So at the end of the day, it was good for the company because there is an announcement of the financing for LAC. So the 1 million now is worth 700,000. So it was very good for NOAA. I mean, for me, I had the impact on my portfolio, but the repayment is based on that. So there is no interest. I wanted to be repaying the same number of shares, and yes, I got the options for the conversion in NOAA shares as well.
Right. What's your relationship to Lithium Americas? Because you're mentioning these shares. Was it just a shareholding for you, or?
Now I'm a shareholder. I used to be a board member. I was an independent director. I joined Lithium Americas as an independent director in 2016, and then in 2017 I was president of South American operations. I was CEO of the joint venture between Ganfeng Lithium and Lithium Americas, XR. So, and I retired from Lithium Americas in 2021. So, I'm still a relative big shareholder of Lithium Americas. So, that's my relationship. And now I'm just a shareholder.
Okay. Yeah, fair point. Once you go to the market and start looking for capital, how much money do you think you're going to be looking for? Like, what kind of a budget are you looking for this year?
We are talking about probably in the neighborhood of 15 million approximately that we would like to raise during this year to complete fully the campaign. And we still got some payments to be made on some of the properties. We got options agreement on some payments. There's a small one that we still got in Rio Grande, and the rest are associated with option agreements that we got in Arizaro and Salinas Grandes. So this is what we're looking for this year.
And that's what's going to get you to PEA?
Yeah.
Okay.
To get all the information for a PEA. I don't know if we're going to be able to start that this year, but at least to get everything set up to start the PEA.
What do you mean you're not going to be able to start it this year?
No. I mean, because we are planning we wanted to accomplish first the expansion of the resource, the pumping wells, the water, and the engineering, and then start the PEA towards the end of the year. Once we get all that, that's the idea.
Yeah. Okay. No problem. Makes sense. What I'm wondering about, because I think I'm getting a better idea of the NOAA story and where you're going and how it's all going to work. I appreciate the short geology lesson there as well. But is everybody out there really understanding it? And like, do people really know about this story? And I mean, after lithium dropped off and kept dropping for a while, as you said, might be bottoming and starting to go back up again. Might being the important word here, but the interest in the space has dried up a lot. I mean, the internet has gone silent on it. But the number of issuers, the number of companies has not dropped. It's actually gone up. And so I'm wondering about the supply and demand dynamics for lithium stocks. So not for the metal, but for the equities. Is there as much demand is there demand to match the supply of equities that we have? So talk to me here about how you plan to tell the story. How do you market the story? How much money do you want to spend on marketing? Who do you market it to?
We started marketing more aggressively last year. We paused during Q1, or at least paused, during Q1 in order to get the main resource. We started we did some marketing at the end of Q1, and we are planning to continue marketing during Q2 with more effort during Q3 once we get more results from this campaign. We do believe that our story is not well known. We found out that when we started marketing more the company last year. We made a change in September last year. We changed the CEO. We had a CEO that we hired when we put together the company. We thought at the time that it would be better to have to hire a CEO rather than we founders being on the driver's seat. But in September last year, we decided that we rather be on the driver's seat ourselves. Be in Argentina, based in Argentina, where the activities is located. And we started ourselves doing the market, and we found that the story started to be better understood of what we have. But I personally believe that we still got a lot of ground to cover in terms of awareness of NOAA and the potential of NOAA. There are not many companies, I mentioned that before, there are not many companies that got a resource like we got in Rio Grande, 2.3 million tons LCE, with the average grade that we got is 612 milligrams per liter. There are not many companies, even if there is a single one. I don't believe there is a single one, because the advantage that we got besides that is that we don't have any commitment. We don't have any commitment in terms of offtake. We don't have any commitment going forward. So it's a unique thing. There are the companies like I don't know, just the examples of Argentina Lithium and Energy. Got 10% of our land package, half the grade of what we got. I made a deal of 90 million for 19.9% participation in the company with an offtake agreement. Again, with no resource estimated. We believe that it is unique what we got. We got no strength, nothing. Everything is still to be done in this company, and we haven't unlocked anything on Arizaro and Salinas Grandes. So I think that the story is not yet fully known by the market. The other disadvantage that we got, and this is real, we don't have much liquidity. And this is something that we need to fix, and that is related to the way that we raise the capital for the company. We raised approximately 15 million so far in different stages, but 85-90% of that came from investors in Argentina. Investors that trust us for the story that is a midterm, 3 to 5 years. So most of them, they didn't even deposit their shares in their accounts. So these shares are not even in the market. So we don't have much liquidity, and this is affecting us in a certain way.
Yeah. So essentially your job now becomes go out there and tell the story.
Yeah.
Is that, by the way, the only job? You're not involved in any other companies where you're sitting on boards or doing CEO positions or something else?
I'm sorry?
Are you involved in any other companies
No,
as a
no,
chief something? Okay,
no,
good.
no.
Well, so that basically becomes your main job. Who do you go to? Like what do? You do conferences? You have any other plan? What do you how do you tell the story?
Conference, yeah, conferences, um, road shows. The idea is to start doing more road shows in North America, Europe. We believe that Europe now got wanted to have more exposure to lithium, especially in this area, and Asia. We found that we got a lot of meetings in the US. There's a lot of interest in the US as well. Um, so one of the things that we are evaluating is be listed in the US through OTC or dual listing in order to get more exposure there. But we believe that markets to look now, it should be outside of Canada, where probably there are more interest in lithium than in Canada itself.
Hmm. Well, I hope you're right, and it'd be interesting to see how you develop this story here, Gabriel, because it seems like you have something interesting on your hands. But I think I'm all out of questions. What am I forgetting to ask you here? What did you come here hoping to talk about, but I'm failing to bring up?
Oh, I think I covered pretty much where we are. I think that again, as I reiterate, we as founders, management, um, we are really confident on the story that we got, the assets that we got. I think that probably another differentiator that we got is that both Hernan and myself, even though we got the hat of management and directors, our real hat is shareholders. We got a lot of skin in the game, so we are aligned with the rest of the shareholders of the company. We are the biggest shareholders of the company, and our interest is unlocking value for us and the shareholders. This is our value. We are not here for our paycheck. As a matter of fact, we are delaying our compensation. We are not getting anything because we believe in our story. We are shareholders. We work for the shareholders' value creation. That's it. And probably that this is one of the what we believe is differentiated with other companies in the space.